Boom. So, yo, what is up for everyone on the YouTube replay? I hope you're having a great day. The market is open right now, and let me just start this off with a quick portfolio update. There was a little bit of news that sent the market up. Let me check the Qs real quick. Look at that. The QQQ is up 0.59 to a new all-time high. So, if you've ever owned the Qs or the S&P 500, you're for sure up on your money. So, congrats if you own stocks. Most likely your portfolio is green, but my portfolio, here we go. Actually, so I'm drinking a Sprite here. But yeah, um my portfolio is red on the day, but most likely your portfolio is green. Check this out. Year to date, we're up 18%. And we also have a Roth IRA with Robinhood, but this is known as our dividend only portfolio where every stock in here pays a dividend. And here's also our total percent change. So lifetime, we're up on every single holding in here, which is great news. We got a lot of popular names in here like Meta, Google, McDonald's, Constellation Energy, and but here's my Roth IRA. It's also down on the day. It's subject to change. We have $200 of cash on hand, and here are all the stocks that we own in here. Again, I plan to make some major changes, but yeah, we've been adding more to Cormetics. We bought 6 shares of them today. So yeah, that's our Robinhood portfolio. Then we have our Moomoo account, which if you look in the top left, it's called our buy and never sell portfolio. Because once I buy a stock in here, I try and never sell it. And these are all the stocks that I've chosen. Look at Powell Industries, an insane new all-time high. They just continue to climb higher. I don't understand it. They might be having a short squeeze because if we go down here to the short interest, this is high, this is way higher than your average stock. The short interest is a 15.69%. So there's a lot of people shorting Powell Industries, but this stock is at a new all-time high. So maybe it's the shorts buying back in. And even though this stock is at an all-time high, they're only trading at 26 times PE. The industry average is 44, so they're still at a significant discount. That's because this one is more exposed to the oil and gas industry than a lot of their other competitors. But check out the net income here. This is incredible. I mean, they're making 40 to 50 mil in net income a quarter. They have no debt at all, actually, completely debt free with $433 million of cash that earns them. They earned interest on their cash. That made them 3.98 million of interest. So they made 4 million of interest on their cash this quarter. And they literally also pay a dividend. The dividend only costs 3.23 million. So they literally make more interest on their cash than the cost of their dividend. So Powell Industries is a cool company. Probably it's a tough risk to reward to buy here, but I mean, I can see this one continue to climb higher. Only a 25 PE. I expect a lot of future dividend growth in the future. They could easily afford to double, triple their dividend. Again, they make more interest on their cash than the cost of the dividend. So pretty cool. Hey, what up, Cruz? Thank you for mentioning CCJ Chemico up 25%. Yo, really? You decided to buy that one? That's awesome, yo. If you're ever wondering what is my favorite uranium play of all time, it would be ticker symbol CCJ. I think they changed their ticker symbol. If I'm maybe crazy, it used to be CCO, but anyway, the company's called Chemico. Best uranium play out there, in my opinion. And look at that, they actually partner with the U.S. government as part of to build new nuclear reactors. And as you know, nuclear reactors need uranium, and they're one of the best uranium play, in my opinion. So yeah, that's so cool. And it kind of the government deal kind of approves that. So yeah, that's our this is our Moomoo portfolio right here, and we finally have our Weeble account. And we are slightly green. We're up 0.29% on the day. AMD just continues to climb higher. I can't believe it. They're no longer advanced money destroyer. This is advanced money duplicator now. I mean, they're crazy. They're one of my favorite semi plays, but I certainly wouldn't touch it here. Actually, a lot of stocks I wouldn't touch at their current valuations. Like we look at Robinhood, SoFi. Actually, SoFi, yeah, someone said you check out SoFi with their earnings report. I don't know if I'll be able to see their actual earnings report today, but yeah, I'm surprised SoFi. The earnings were phenomenal. They beat on earnings, but I'm surprised they're green, like because of how much of the beat was already priced into the stock before today. Like they were already at all-time high. So I'm just so happy SoFi's green. I mean, that's incredible. I'm a shareholder of them. And then we, of course, have some losers in here. This is kind of like my risk on portfolio. No way, dude. Dude, shout out to the homie Cruz right here. No way. With the 9.99 super chat. Yo, shout out to the homie Cruz on the YouTube stream. By the way, best way to support me is just watch the stream from YouTube. I'm streaming on YouTube and TikTok right now. But yo, thank you so much, dude. If you got another stock you want to look at, let me know, man. Hope you're having a great Tuesday. So let's see here. Thoughts on selling Intel? Maybe I trim Intel. I probably wouldn't fully sell out as Intel. But let's check out SoFi. Let me see if we're able to pull up their numbers yet. So Q3, yeah, here were their numbers. This is awesome. So it has not loaded down here, but it has loaded on these actual analyst expectations. So the orange lines, what the analysts expected. The analysts expected 895 million. Well, they reported 949 million. A huge beat. A huge beat on EPS, which is net income. They expected 8 cents. They did 11. That's a 30-40% beat. And same with EBITDA as well. It was a triple beat on every metric, and they always beat. So that's why, in my opinion, people are just really starting to take SoFi serious. The main growth driver for them is actually their financial services. Check this out. It's up 105% after it grew 80%, after it grew 223, after it grew 264. So they're just super growthy. I think that's a kind of stock that's just going to continue to climb higher, but I'm not happy about their current valuation though. Someone said, what app is this? Yeah, hey, I'm not sure what app you're talking about, but all these apps I'm using are all in the link tree in my bio. The orange one right here, these are all brokerages where you buy stocks on. They ask you for a bunch of information, but yeah, out of all three of the brokerages, this one's my favorite. Lowest fee, costs nothing. It's a link tree in my bio, the very first link there. Yeah, Robinhood, Webull, and Moomoo. Okay, can you revisit CEG? I want to accumulate for my Roth. Yeah, this is my favorite nuclear play of all time. This company literally owns 30% plus of all the U.S. nuclear reactors. They're also the number one geothermal play in the U.S. after their Calpine acquisition. And there's just the sentiment around the nuclear industry is really good right now, and this is the purest play for nuclear energy. And you can invest in the nuclear ecosystem as well, like buying some of the uranium waste. But these are the ones that actually owns the most amount of reactors, and they print money. I mean, they make a couple hundred mil or close to it. Their EPS is going to CAGR 10% plus through 2030. So the growth is there, and that was their own expectation. They said on their own investor presentation, their EPS is going to CAGR at 10% plus through 2030 every year. You get a 0.4% dividend, super low payout ratio. Notice the growth though. 2022 was 50 cents. Now it's $1.50, or it's nearly 3x the dividend. So super fast dividend raises. They also do share buybacks. In my opinion, the best nuclear play out there. So there's also Vistra Energy. They own like 3 or 4 nuclear reactors. They've actually been a little bit growthier than Constellation Energy, but as you can see, they move they move pretty similarly. Oh yeah, look at that, especially on like the past couple months here. CEG and Vista Energy are two very similar names. So yeah, but I'd pick CEG over VST in my opinion. Hey, again, none of this is financial advice. I'm not an expert. I sell nothing. I have no course, book, WhatsApp. But someone said, is Call Main still a buy? I think so. Oh, wait, hold on. I forgot to show this. I do own CEG, by the way, full disclosure. So I'm totally biased on them. I'm up 80% on them. But yeah, we got 15 shares of Constellation Energy. They're our largest holding in our dividend and portfolio. Every stock in here pays a dividend, and they're my largest holding. They actually grew to that size. But I'm not selling out or trimming, because even though I wouldn't buy Constellation Energy at their current price, 385 is a little pricey. But I'm not selling either. I certainly wouldn't sell. So let's look at Call Main here. That's actually one I just bought more of in my Roth IRA. This is your chicken egg play. Kid you not, largest market share in the U.S. for chicken eggs. And here's this, oopsie, I don't know what I just clicked there, but yeah, this is their stock. They just sell a commodity, so they traded at a low valuation. We're down 2% on them. We're down 2.4%, but let me show you their numbers, because that's what I like to look at. First off, you get a crazy dividend, but the dividend changes every single quarter based off how much they make. They have a rule where they only pay out like 50% of the net income they make, or a certain percent. I forget the exact number, but that's why the dividend and the yield changes every quarter. But if we notice the PE ratio, they trade at 3.44 PE. I bet you're like, is that real? Is that on some one-time adjustment? And then, no. The answer is no. They really trade. Again, the PE ratio is price to net income plus any buybacks or share dilution, but they literally trade at 3.5 times net income. That's what I love about this stock. First off, well, again, they just sell a commodity. That's why. But look at the market cap. This whole entire company is worth $4.34 billion. They also have no debt. So the whole company is worth $4.3 billion. They have $1.3 billion of cash on hand. So literally 25% of the entire market cap is their cash on hand. So then you're just left with the business that, see how much net income they're making. You can even do an X cash PE multiple. They're actually trading at like 3 times net income, which is crazy. Again, the forward PE though is like a 10. The net income is expected to go down because, as we know, the prices of eggs have been nuts lately. But Yeah, it should normalize and go back to normal. Someone said PE is not price to net income. Yeah, yes, it is. Actually, that's not what I said. The PE ratio is the price of net income plus any share buybacks or dilution. Is what I said, and that's exactly what it is. But anyway, this is Calmain's their largest sell. Conventional shell egg sales. It's only up 4.3% year over year. Specialty egg sales. They're also getting into like their other prepared foods and other. They're expanding their own brands, egg products. Oh well. So anyway, I just like them. I have a few shares of them in my Roth IRA. All right. So let's see. Um can we Jack Mack. Hey, what up, Looney? Hope you're having a great day, dude. Jack said, can we look at Micron? Yeah, I love Micron right here. So Micron Technologies, this is a $250 billion company. This is one I would not take a single dime of profit on. I think they're just going to continue to climb higher. They're starting to catch up to the normal valuation of like the industry. Like you look at Nvidia, Broadcom, AMD, like they're all at crazy 50x PEs, but they're only trading at 29 times PE, and they're just as growthy. Like the growth is finally back on this one. That's why I think they're starting to catch up. If we look at their revenue growth, the sales are up 46% year over year. That's after they grew 93%. So the growth is back, and not just top line, but also bottom line. They made $3 billion of net income this quarter, up 260%. You get a dividend too. They're expanding margins. The net margin went from legit 11 to 28. So just insane. What happens is, yeah, hey, by the way, this is a brokerage. It's where you get stocks on. If you wanted to get it, it's in the link tree in my bio, the very first link there. Okay. All right. PE is priced over earnings per share. I know that. That's what, oh my goodness. Okay, PayPal stock. Let's see. PayPal, PYPL. So they just reported earnings today. They had pretty good. They actually announced a dividend for the first time ever. PayPal Venmo partners with BILT for housing payment services. Imagine that you pay your mortgage with Venmo or something. PayPal teams with Google Cloud for AI commerce services. I think they also partnered with like OpenAI or something. So they have a pretty cheap valuation. They traded like 12 times forward net income. Let's see. The current PE is a 15, but let's see. What were their actual earnings? Let's see if they loaded. So yeah, they beat on revenue. The analysts expected 8.2. They reported 8.4. A big beat on EPS as well. Check out that net income beat and EBITDA beat. So yeah, it really was a triple beat quarter, and they announced a dividend again. These are last quarter's numbers. But one thing I love about PayPal specifically is the share buybacks that they do. If we go over here to the net common stock issuance, again, you want this to be negative because that means they're buying back their own shares. They're legit spending $1.5 to $2 billion a quarter solely buying back their own shares. And here's what it does for you as a shareholder. If we go to the net income is up by 11, but the net income per share is up by 19. So that's the share part of the ratio. That makes the EPS go up higher than the net income growth rate. All right. What happens? Yeah, hey, again, this is a brokerage where you get stocks on. Yeah, hey, it's called Moomoo. It's in the link tree in my bio, the very first link there. They ask you for a bunch of information. You get a tax form and stuff. Okay. Ooh, Would you buy TSLG? What is TSLG stock? Nokia? Hey, what's the ticker symbol for Nokia? Maybe we'll check that one out too. I forgot they're even public. Hmm. So yeah, this is leverage 2x Tesla share. So basically what I like about this is there's also TSLL, which I think is the exact same thing. But what I like about these is if you want to do options on Tesla, to buy options or calls on Tesla, it's really expensive, but it's easier to do it because the share price is only $20 or $11 on the other one. So they're easier for doing options. I don't love the 2x leveraged ETFs and stuff like that, but you use that as a complete trading vehicle. Hey, what up, Sermon? Good to see you, brother. All right. Bought Micron in 60s. Hey, nice. All right, so yo, what up, two Cat Rhines or Katrines? How's it going? I'm probably saying your name wrong there. Okay, so SMR stock. This is another one of the nuclear names. They're probably up crazy just from the whole momentum around nuclear today, around the government nuclear reactor speed up deal. Yeah, here's SMR. That's their ticker symbol, but SMR also stands for small modular reactors. So yeah, they basically have their first ever customer now. Like before today, like if you look at the last year, they only did a 900,000, 400,000 of revenue, but now they have some real sales the past 3 quarters. So, but I still think it's a stretch to pay a $12 billion market cap. It's still tough to pay. Uh, but yeah, that's one of your. It's a nuclear momentum name, kind of like Oklo. I wouldn't touch Oklo either just because the market caps are too crazy. Like I would rather buy a CEG or a VST, something like that. Okay. Thoughts on PayPal earnings? Hey, Luffy, we just looked at PayPal. Yeah. It was a triple beat quarter. I can see why they've gone up so much. Yeah, PayPal deserves to be up that much. They also announced a dividend and so like a partnership with OpenAI. I mean, if you have a partnership with OpenAI, your stock just like now instantly goes up. Yo, what up, yeah? What up, New York? What are your thoughts on EPAM? EPAM. Oh, then we can look at Broadcom and Nano Nuclear. That one's a big momentum one too. Wouldn't touch that one or with serious money unless you're swing trading it or day trading. But here we go. EPAM. This is a $9 billion company. Hey, that's a pretty big market cap, but unfortunately, the stock is the same price that it was back in 2019. Do they have a high dividend? No dividend on this company either, so that's unfortunate. Professional services, 60% of the revenue comes from the US. Looks like the growth is back, but the margins are not. So check that out. The revenue, the sales are up by 18%. So the revenue is up by 18, but the net income is down by 11. So is that real? Kinda. So it just basically means the margins are falling. So the net margin fell 25% year over year. I mean, it's not the end of the world. They're still making a bunch of net income every quarter, but they traded 23 times net income. Digital engineering cloud. Let me check annual revenue. So yeah, look at that. The sales have it's lower than it was in 2022. So this company's actual revenue is lower than it was in 2022. So it's kind of just been a slow growth company. Oh yeah. So we kind of just want to see the growth come back to that one. They still make a net income every quarter. Like they're not going bankrupt or anything. But nothing's really blowing me away. But it did look like the growth is starting to come back though. Hey, what up, Catherine? Do you Nebius? Hey, remind me to look at Nebius. I do want to look at him. Can you do UNH, please? Hey, what up? Yeah, hey, UNH, that's actually a stock that Warren Buffett just bought the dip on. If we go to Warren Buffett's holdings, we can see new right here. We go to new, and these are all his new positions this quarter. He bought ticker symbol UNH for the first time ever. And that's why the stock actually rallied up so much. Warren Buffett really does his due diligence. He doesn't buy just any stock. So that's why the stock legit went up 10%. And the sentiment has really just been in UNH's favor because if you didn't know, the reason they crashed like crazy is because there were fears they're going to get kicked out of Medicare and Medicaid for fraud, overbilling the federal government, selling people the back brace they didn't need, stuff like that. But looks like the chances of them getting kicked out for 5 years are like going away. We're also a customer. We use OptumRx, but it's the oh wow, actually this just got updated to future expectations. So the EPS is supposed to jump back up to 60. That's great news, or $6. I mean, yeah, it's supposed to go from 6.80 to $1.60. So, anyway, The reason the stock is collapsing is because the future sentiment is so bad and maybe it's slowly being unpriced. I wouldn't touch this one at this price. Congrats if you own it before today because you're probably doing great, but I wouldn't. The risk reward doesn't look great buying it at this price. Maybe like 340 or something. All right. Nvidia's at all-time high. Really? Nvidia having their investor day, right? Oh yeah, look at that. Congrats if you own Nvidia. I mean, nearly 200 a share, a $4.75 trillion company. Here's the one thing that's like tough about Nvidia. Let's say you just buy a share of Nvidia right now. For you to double your money, you see the market cap of 4.75 trillion. They would have to be worth over $9 trillion for you to double your money. That's why I suggest, not financial advice, you should maybe look into the AI ecosystem or Nvidia ecosystem beneficiaries. And but another one I chose is just AMD because I thought it was just an easier double from the law of large numbers. Like if you look at the market cap, they're only worth but they're worth 424 billion. I feel like this one could still maybe double, triple, or it's just a easier double and a triple than it would be at Nvidia. But I think they're both going to win together. Nvidia will still go up like a big chunk. I mean, here's some of their numbers. Hey, let's look at them. This is why Nvidia deserves to be worth nearly 5 trillion. Like, check this out: 24% PC GPU market share. They have this automotive software that like Lucid license, or they license to Lucid. But if we just go to their net income, this is the crazy part. You know, their after-tax net income was 26 billion just in the most recent quarter, up 59%. After grew 168%. After grew 850. I mean, if there's another company that can follow these sort of growth rates with their bottom line, then they deserve also a 5 trillion market cap. So yeah, you know, their customers are the cash-rich companies, the other Mag 7, OpenAI, Oracle, all flooded in chip orders. They have the best chips. So yeah, congrats if you own Nvidia. Wouldn't probably buy them here though. Uh, but I wouldn't sell them either. I just hold on to my shares forever. What do you? Oh, hey, shout out to Isaiah. No way with the huge gift, the hand heart. Thanks so much. He says thoughts on Nokia. Hey, let's type it in, Nokia. So, wow, they're up 25% on the news. Let's see what this is. Nokia gains 20% on news. Nvidia plans to invest $1 billion. No way. So that'll send your stock up 25%. You know, I never would have expected that. So Nvidia, what's the market cap of this one? 42 billion. Well, before today, it was probably 30 billion. So Nvidia, I'm going to just guess, owns around 1/30th of the company, probably buying like 4%. Probably Nvidia will own around 3 to 4% or something. I don't know, but that's great news. You know, Nvidia as a partner, a shareholder, a backer. Did they report earnings as well? Let's see. So they beat on revenue, or this might not be the most recent quarter. I think it is though. They missed on net income, but they did beat on EBITDA. And also, here's their right now chart. If we zoom out on the monthly though, as we can see, Nokia, of course, lost the phone battle to Apple. But yeah, the stock is technically the same price that it was in 1998, but that's an insane, monstrous rally they've had. Congrats if you own them, dude. That's insane. Hey, what up, Ali? Okay. All right. Hey, what up? Keep in mind, Nebius is spending money on expansion when you look at net income. Yeah, Nebius is a big money loser. So let's actually pull up Nebius right here. That's actually one of the stocks that Nvidia owns. And again, I wouldn't just buy a stock just because not even just because Nvidia owns it. Some YouTuber you see owns it or something. You know, always go do your own research on a company. Let's go look at Nebius right here. They also just put some money or backed, Uber and Nebius announced a $375 million strategic investment into AV Ride for autonomous vehicle deployment. And these autonomous vehicles will do robo-taxi services and delivery robot operations where they deliver the food to you, where you just like pick up the food in the car. But it costs a lot less than a human driver. But check this out right here. If we go to Nebius's numbers, even before the partnerships, again, this doesn't even mention the $17 billion Microsoft GPU deal they just got. But this is a growthy company. We look at the revenue. It went from 14 mil to 100 mil. Yeah, they're still losing. Look at that, 100 mil a quarter. So not great, but if they can keep up this growth rate, who cares, you know? And we can see what the analysts are expecting. It was 100 mil this quarter. Analysts are expecting 265 mil in 2 quarters, you know, a 31 bill market cap. So yeah, they're going to host basically some of Microsoft Azure Cloud. So kind of cool. That way Microsoft doesn't have to invest in the infrastructure themselves. They just let them do it, take on that liability. What should I invest on? Yeah, hey, if you're looking to buy stocks, you need a brokerage. I'd recommend this one I'm on right now. If you want to get it, it's in the link tree in my bio, very first link there. It's an affiliate link too, so if you go and deposit $100, we'll like both get some free stocks. But yeah, free brokerage, no fees, no commissions. Yeah, best brokerage, I think. Okay, T Rowe. You know, I actually own T Rowe in my other brokerage. By the way, all these brokerages I'm all using are all in the link tree in my bio if you wanted to get any of them. Oh, hey, is that Wix? Oh, I thought that was today. Yeah, we're still red on the day. Yeah, we're going a little bit more red in this portfolio as well. Let me check the Qs real quick. The Qs are at a new intraday high. Actually, not just a new intraday high, but a freaking all-time high. So congrats if you own the QQQs or the NVIDIA. Probably just QQQ or S&P, probably led by NVIDIA at an all-time high. And Jensen Huang, the NVIDIA CEO, is like live legit, I think, right now. I was watching the stream earlier, then I just got bored of it. But hey, we'll look at Waste Management. Waste Management reported earnings. We'll look at Visa. Definitely going to keep my... Hey, yeah, nice sermon. So here's T Row. Oh, speaking of the whole reason I did this, I do own them, by the way. They've actually been one of my better performing dividend growth companies. So not only, if you look in the middle, you get a 5% dividend every year, but we're also up 17% on our shares, which is pretty crazy. I didn't expect that for a company with a 5% yield. I bought this for the dividend. I'm literally that guy. Here's the plan here. I'm going to get a 5% dividend, and then I'm going to hope for just 2% a year stock price appreciation for a total 7% yearly shareholder return. And here's why I picked them. Out of all the 5% yielding stocks out there, here's why I chose T Row to buy on the dip. It's because of their phenomenal balance sheet. First off, they have no debt at all. T Row is debt free, no debt on the books. That's a huge safety net. And they have $3 billion of cash. So it's a debt free company with $3 billion of cash that literally makes, we'll call it, 550 million in net income a quarter. So debt-free company making 550 million in net income a quarter that pays a 5% dividend, and that 5% dividend only costs 285 million. Notice the cost went from 289 to 285. How did the cost of the dividend go down by 5 million? Because they bought back so much of their own stock. So since the dividend costs so little and they have so much leftover money, they're doing so much insane share buybacks, 100 mil plus a quarter. And when you buy back your own shares, the cost of the dividend goes down. So look, the net income grew by 14.5. So the net income's up by 14, but the net income per share, is only up by 6. Well, maybe I'll check the diluted weighted average shares. Maybe there was some sort of, maybe they did dilute you. Yeah, hey, try not to spam there. What up, dude? What up, Christian? What are your thoughts on AppLove? And hey, yeah, so, but look at this, 4.8% dividend. The cost of the dividend is safe. So, hey, Jojo, no way, dude. Thanks for all those gifts there. Really appreciate that. All right, so we have a few we got to get to here first. Waste Management, I love this company. Then we'll get to Visa and then AppLove. That's on the list. So then we'll probably get to maybe Astera Labs, ISRG. We'll get to these two. Sorry. All right, so here's Waste Management. Hey, thanks again, WTF, it's Jojo. No way, dude. These gifts. That's crazy, dude. Thanks for the witchy kitty and all that. I really appreciate all those gifts. So here's Waste Management, a business that I think is worth buying right now. Like, as a never sell stock, this is the business model you want to own. I mean, it's literally trash or no, everyone has to throw away their trash. Americans are so wasteful. And 95% of the revenue is in the US. There's new recycling laws. We just don't litter in the U.S. So I don't know what I'm trying to get at, but sorry, I'm drinking my super, I don't know why it's so bubbly. My drink, it's like extra carbonated and it's hard to, okay, but they're printing money. This is why I think Waste Management's a never sell. They literally make 600 to 700 million of after-tax net income a quarter. Bill Gates owns them. The Bill and Melinda Gates Foundation owns 8% of the entire company. Was this the most recent quarter? Let me see. So here's Q3. Here's their actual numbers. So they missed on revenue. A big miss on net income. We'll have to dig into that. Look, and a miss on EBITDA. So yeah, they honestly, looks like it was a quite a big miss on what the analysts expected. So yeah, it says the net income fell by 21, but the operating profit grew by 8%. Was it acquisition related? Because I remember they did a big acquisition. They spent $8 billion and they're still spending like $1 billion. So looks like there was some sort of one-time adjustment. I wouldn't be worried. I'd actually be looking into buying Waste Management. You get a 1.57% dividend yield. They're like as safe as McDonald's. Actually, they're on my I legit want to own them. Hey, thanks again, Jojo. Let's see. He says, can you look at Qualcomm? Definitely. Congrats. Congrats if you're a shareholder, because you are definitely doing well on your position, because I know they just reported earnings. Hey, what up, David? We got to get to Visa after this. Visa and AppLove. But dude, thanks again, Jojo, for all the freaking gifts there. I appreciate that. Hey, what up, Sermon? Plug in your phone. I know. We're getting a little low here, but here's Qualcomm. Let's go look at the AI news. Qualcomm launches new AI chips, forms strategic partnerships with Saudi Arabia's Humane. That's interesting. 6 Qualcomm executives. Okay, so anyway, Qualcomm subsidiary to acquire AlphaWare IP, Samsung, Google, Qualcomm launched Galaxy XR headset at $1,800. Well, anywho, let's just go look at their actual financial metrics. They traded a fair valuation. The PE ratio is just the price and net income plus any share buybacks or dilution. So they trade at 17 times net income. And then we can see their smartphone chip. So I think they own Snapdragon, if anyone's heard of that before, but they have a 26% smartphone market share. If we go to their net income right here, they make great numbers. That's what I love about them. This is why I think they probably have room to even go higher and stretch up their multiple, like only a 17x PE for a company that's doing 2 to 3 billion a quarter, but specifically the growth rates, like the net income's up 25. I think the PE is kind of low because of the sales growth is starting to slow down, like 10%. Last quarter was great, 16, 17. But yeah, that's also good news. The revenue's up 10, but the net income's up by 25. What does that mean in English? That means they're expanding margins. So yeah, they make 2 to 3 billion net income a quarter, and you get a great yield. It's like a perfect dividend growth company that I trust to raise the dividend every year faster than inflation. You already get a 2% dividend. They qualify dividend, safe valuation. We can see the Morningstar research. Let's see, what do the bulls say? Qualcomm collects royalty. Oh, wait, what is this? I didn't know that. Qualcomm collects royalty income on the majority of 4G and 5G handsets sold, as it holds the essential patents used in the network. Well, check that out. That's actually pretty cool. I'll put them back at the top of the watch list. Qualcomm's an interesting one. Nice dividend. I'd happily own and never sell them. So, okay. Let's look at Visa right here. Someone said, what are your favorite dividend paying stocks? So you're not going to love this answer. And we got to look at Shopify to remind me to look at Shopify. But if you look in the top left, this is called my dividend only portfolio. Every stock in here actually pays a dividend. But as you know, most of these are like dividend growth companies like Google, Meta, Constellation Energy. But all these, I like the dividend companies with low payout ratios. But I also have Iron Mountain. This is a REIT, a real estate investment trust. Those always have high yields. They have a 3% yield, safe payout ratio. So I like Iron Mountain as a cool play. Okay, we'll get to Shopify after this too. Anything AI is going to rip higher. Hey, well, what up, Megatron? So here is the Nancy Pelosi portfolio. One of the stocks she owns is actually Visa. Hey, this app is telling me that, what is this right here? That there is a bearish flag. And the probability is okay, anyway. This is... Technical analysis aside, this is a stock you just want to buy, never sell for sure. If we go to their after-tax net income right here, they literally make $5 billion in net income every quarter. I mean, that's insane. And what is Visa doing with $5 billion of after-tax net income a quarter? Well, as we know, they pay a dividend, but the dividend only cost $1.1 billion a quarter. So, and the cost of the dividend goes down because of the buybacks. But since they have so much leftover money, they're spending all the rest of their money on share buybacks. Check this out. They're spending legit $4 to $5 billion on share buybacks a quarter. Here's what it does for you as a shareholder. Again, we look at the net income. The net income grew by 8%, but the net income per share grew by 12. Again, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes this is the share part of the ratio. So that means they did share buybacks. Anyway, just a shareholder-friendly company, buys back legit 3 to 4% of the company a year. You get 0.66% in dividends and a couple percent stock price appreciation. So you should just get like 10% total shareholder returns a year here. And it's at a pretty interesting valuation. They always trade expensive though. Can you show her portfolio? Yeah, here's the Nancy Pelosi portfolio. A lot of it is just in like stocks we all know and love. Yeah. Like Pan W is a cool one. CrowdStrike, Netflix. And you can like batch trade, follow her into her portfolio if you wanted to ever. But yeah, that's a Visa. You know, those small little credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. So Jim, what up, dude? He said app love. And then remind me to get to Shopify. Again, I'm so sorry. What app? Yeah, hey, again, if you want to get this app, this is a brokerage where you get stocks on. It's in the link tree in my bio, very first link there. It is an affiliate link too, full disclosure. So if you go and like deposit $100, we'll both get some free stocks. But here's AppLovin. They just got added into the S&P 500. Hey, Jeff Mack, what up, dude? He says, you can thank me for anyone that invests in PayPal. I've given them a ridiculous amount of fee money. Yo, that's funny. Yeah, PayPal has ridiculous fees, and I'm upset with PayPal. Like, I'm about to like go with someone else. But yeah, PayPal collects a lot of fees from me too. So here's AppLovin right here. This is a stock that deserves to be at all-time highs right here. How does a stock go from $80 to $600? Well, it takes more than just momentum. It takes real fundamentals going up. And check this out right here. If we look at the revenue is up 77% year over year. So the revenue is up 77. It was $1.26 billion. Remember that, $1.26 billion in revenue. And out of that, 820 million of that was after-tax net income. I can't believe this. Their net margin was a 65%. Like, that's more than NVIDIA. Like, that, I can't believe that. Like, and that wasn't some one-time adjustment. Like, that was real. The operating profit was higher. That's after the 150, 180 million of taxes they paid. That's insane. Like, no one, that's why they continue to momentum higher. No one expected this sort of margin expansion. They just got added into the S&P 500. The SEC is literally investigating them for how good their ads are. Yeah, AppLovin faces SEC and multi-state investigations over data collection practices. So they're just so good. They're on my watch list. I'd love to own them, but at a more reasonable valuation. They may not get to a more reasonable valuation just because they're so quality. But yeah. Hey, someone said 10 now. Yeah, I don't know. Hey, what that stock is. Yeah, if you got a stock you may look at, let me know what the ticker symbol. We'll try and check it out. So let's look at Shopify right here. That's a company. Also, if we go to the watch list right here, you know who owns that one is Kathy Wood. Kathy Wood, owns Tesla, Hood. But her fourth largest holding is actually Shopify, and it all-time high today. Dude, I've been telling people this is a stock you want to buy and never sell. Great e-commerce play. I used to have a Shopify store. Literally, even if you have the pro tier subscription, every time you make a sale, 0.25% of it goes back to Shopify as a royalty. Anyway, this is a growth stock. Like if we go to their annual revenue right here, this is insane. Check this out. I mean, every year it just hits a new record, every quarter, every year. That's the kind of thing you want to see. That's what justifies the stock being at an all-time high. And that's also after selling off one of their assets. But we go to net income. They had a one-time adjustment this quarter. It says it was negative 600 mil. It wasn't actually, but they print a couple hundred mil of net income a quarter, and it grows like crazy. Same with the FCF, which is free cash flow. It's oh, dude, I got to mute you here. Sorry, man. Try not to spam in chat like that. That's not cool. But yeah, Shopify is crazy. They deserve to be at all-time highs. All right. Might have it already. Ooh. Okay. Which one should we go here? It's awesome how we can do fundamental analysis in stocks unlike crypto. Yeah, like on crypto, there's no net income number. There's no net margin they can miss. So it's kind of interesting. We can look at numbers here. I agree. What up, Art? Let's look at Chipotle. Then we'll get to what up, Tesla stock too. Hey, watch out for that guy in chat there. Hold up here. Okay, yeah, watch out for people impersonating me. By the way, I sell nothing. I have no course book, WhatsApp, Telegram. I'll never ever follow you or DM you, nothing like that. So please watch out for people impersonating me. I'll never sell anything. So anyway, here's Chipotle. A lot of the restaurant stocks are struggling hard. Yeah, we'll get to NVIDIA too. But yeah, NVIDIA's at an all-time high. They had their new investor day. We got to mute this guy too. Dang, what? Oh. Okay. But yeah, Chipotle, one of the best restaurants out there. But it's the whole industry that's struggling right now. If we go to like Wendy's stock, for example, Wendy's, look at this stock, pretty much all-time low on Wendy's, which is unfortunate. And it's not just them, it's the whole kind of restaurant industry that's struggling. We look at Jack in the Box right here, also all-time low. I mean, the stock is the same price that it was in 2001. So anyway, here's Chipotle. I think this is one of the better ones you want to bet on the restaurant recovery thesis, but they could go lower because the multiple is still a little expensive. If we go to their PE ratio, price to net income, they trade at 36 times net income. The industry average is 28. Like McDonald's is at like 26, and I own a bunch of McDonald's. But yeah, the growth is slowed down on Chipotle. That's the concern. If we go to the analyst expectations, the orange line is what the analysts expected, 3.1. They only reported 3.06. And when you have a high multiple, that's what kind of makes your stock gap down so much. You're a high multiple stock and you're missing on growth expectations. But again, I think this is one of the ones you want to bet on as the restaurants kind of recover. I think McDonald's is a great one, Yum Brands. The revenue, here's the bad news. The Chipotle, the revenue's up 3%. So the sales are up by only 3, barely beats inflation. So revenue's up 3, but the net income is down by 4. So that means their margins did fall a bit. Again, all the restaurants are seeing input cost inflation, all that. California mandating $20 minimum wage for fast food. Like, it's a lot of restaurants are struggling right now, and I get it. Toast is struggling too, and I own McDonald's as well. That's my favorite play because McDonald's, they're not the bag holders. The franchises are because McDonald's, this is really a real estate royalty company. Even that's why they didn't fall in 2008. Notice this. That's why it's a completely different business model than Wendy's. That's why Wendy's is at an all-time low and McDonald's is close to an all-time high because McDonald's is a real estate royalty company. If you go spend $100 at any McDonald's, $4 of that goes back to this corporation as a royalty. Why did these franchises pay the royalties? Because McDonald's does so much marketing that benefits them. They also own McDonald's, the corporation, owns the land under 80% of the store. So even in a recession, even if the franchises aren't making any money, they're still collecting rent and royalties from every. Okay, I'll stop ranting about McDonald's, but they're great. Same with Yum Brands. They also have kind of adopted that business model a little bit. Yum Brands, this is the company. They also McDonald's is great value. Taco Bell's the next like best value. This company owns Taco Bell, KFC. Okay. My Robinhood portfolio just hit a new all-time high. No way, dude. That's awesome. All right, so can you look into my company, please? Yeah, hey, what's the stock ticker? And I can check it out for you. Okay, so here's Tesla right here. I'll be quick. Hey, what up, DPZ? Yeah, sorry if I don't get to all the stocks here. I want to get to AARD, and I want to get to all these, but I'm a little backlogged right now on some stocks. Don't worry, I'll get to NVIDIA. And hey, what up, Steven? Good to see you. Yeah, we'll look at NVIDIA. So anyway, here's Tesla right here. A stock that, give Elon Musk his pay package. What is this? Let's see. BYD European sales surge as Tesla registration drops. No way BYD is now allowed to sell their cars in China. Waymo CEO. Okay. Oh yeah, the future of Tesla, the market cap you're paying of $1.5 trillion is coming from the future hopium from robots and the robotaxi network, which I think will face fierce competition from Google's Waymo and also Amazon's robotics division and just any other company. So I think the margins aren't going to, I think this one's certainly overvalued, but I think everyone kind of knows that it's kind of a story kind of stock. It just has its own mind. This is one I just stay away from, but anyone who's in this name is up a bunch. It's nearly at an all-time high today, but here's kind of the tough part that makes it a tough sell for me. If we go to the growth is kind of coming back now, but like if we look last quarter, the sales were down 12, it was down 9. This is the thing. The revenue's up 11, but the net income, the profits are down by 32, which means the margins are falling. Gross margins are down 10%, net margins down 43. I don't know. Here's their total vehicles delivered. This is one you'd probably want to trade. But then again, I don't know. Good luck with Tesla. I think they're the most overvalued stock, Mag 7 stock out there. I love Amazon. If you like Tesla, dude, if you like a lot of Tesla's growth stories, you'll love even more Amazon's growth stories. Amazon's like literally e-commerce play, subscription play, robotics play, drone play, satellite play, AI play, cloud play. I mean, the list just goes on. They're literally a UPS, a Walmart, an Oracle Cloud. It's in everything in one. This is an ETF in one. And also, you know how Amazon has a stake in Rivian, which does kind of the exact same thing that Tesla does. So if we go to Rivian right here, the largest shareholder of Rivian is Amazon.com. Oh, and then it's Porsche. Has anyone seen those like electric vehicle Amazon trucks? Amazon is undervalued, but Amazon also reports earnings in 2 days. We get Google and Meta earnings. I'm so excited for those earnings. All right, let's pull up NVIDIA right here. NVIDIA had their investor showcase. I think Jensen Huang might be live right now. I mean, right before the stream, I was watching it for a little bit. NVIDIA and Deutsche Telekom to build $1 billion data center. You know, Deutsche Telekom legit owns like 50% of all of T-Mobile, which is worth like $100 billion. Qualcomm unveils AI data. Yeah, there's the list goes on for the news around NVIDIA. Here's why NVIDIA deserves to be doing this well. I mean, what other company can pull this off? And if any other company can, then you deserve to, be the next NVIDIA. But like, look at these growth rates at the top here. These I can't believe the growth, and not just on top line, but the bottom line. Here's their net income. Their after-tax net income was $26 billion the most recent quarter, up 59. After it grew 169. After it grew 843. So they just print money. The whole. This is like you're picks and shovels AI play. I mean, selling the chips to everyone. Everyone needs the NVIDIA chips right now. So the only thing that is tough is the law of large numbers here, like to just buy shares. Like if you look at the market cap, they're worth $3.8 trillion. Or no, $4.8 trillion. So NVIDIA is now worth $4.8 trillion. For you to double your money, they nearly have to be worth $10 trillion. So it's a hard double. So that's why I invest in some of the NVIDIA kind of ecosystem plays, some of the AI beneficiaries. You could buy, well, actually, I wouldn't buy a lot of these stocks at their prices, but like Supermicro, they're the one gets direct shout outs from NVIDIA and AMD for installing your chips for you. They installs the servers for you. You could buy Comfort Systems, the one that cools down the servers with their HVAC solutions. You got Powell Industries for the AI demand switchgear solutions. Amphenol, the one supplying copper cables to NVIDIA for their new NVLink spine products. To Constellation Energy, the one that powers the data centers with their nuclear reactors. The stock CEG legit owns 30% of all the U.S.'s nuclear reactors. Hey, Papa Dan, hope you're having a great Tuesday. What's up, dude? If you got a stock you want me to look at, let me know. We'll check that out. Why Robinhood and Webull? Yeah, I love all these apps right here. Yeah, I got multiple brokerages here. For sure. Yeah, we have a different goal with each portfolio for the new people here. This is our Robinhood account. This is known as our dividend only portfolio. Our Moomoo account is called our buy and never sell portfolio, because once we buy a stock in here, I legit never sell it. And then we have our Webull risk on account, where we kind of just do whatever we want. Open profit and loss, we're only up 26% all time. We've definitely underperformed, but let's see what's up on the day. Futu, hey. Futu's up. SoFi, yeah, SoFi came out with some stellar earnings this morning. I'm shocked. Like, I expected them to beat on earnings, but I still expected them to go down because of how much, like, they're so expensive. Like, legit, they're trading at 96. They're trading at 96 times next year's net income. So I expected them to beat on earnings, but the fact that hey, I'm happy. I'm a shareholder, so. All right, AARD, let's do it. AARD. Oh, hey, what up? Yeah, hey, try not to spam there. We'll get to Broadcom too eventually. Can you check out NEE? Yeah, what up, Phil? We'll look at Salesforce. We'll look at those two. Rubrik, we'll try and get to Rubrik. I love Rubrik. They're a good cybersecurity play. DigitalOcean, what up, Sledge? Good to see you all. So I've never heard of this one. Aardvark Therapeutics, very low market cap. They're worth $260 million. So $260 million company. They're a startup. So if we go to the revenue, it says zero, because they've never sold anything, never sold a product or a service. Yeah, it looks like if we zoom in on the chart, they just IPO'd, and I'm guessing that's how they fortified their balance sheet. They got that IPO money and fortified their balance sheet, because I'm guessing for them to IPO, they must have some sort of successful prescription. I say prescription because I don't want to use the other word and get in trouble. But anyway, you're really just waiting for this company to finally get FDA approval or finally start selling a product. It's so risky to buy these. I never touch those. There's a million of those out there where they're all on revenue list startup stage and are about to release a product. But it's such a flip of a coin. Okay. Let's look at, what up, Jonna? We'll look at Salesforce. We got to get to Broadcom. And Lopez, we got to get to Google as well. They're FDA approved 10 days. That's why I'm curious. Oh, hey, sounds interesting. I wouldn't have that as a meaningful size position, but hey, maybe put in like a small little chunk of money. I have a lot of those kind of positions where, as much as I love the stock, I can't have this a meaningful size position in my portfolio, like Super Microcomputer, Clear Secure, Power Solutions. As much as I love these names and I think they're going to do great, I can only trust a little bit amount of money in them. But here's Salesforce right here. This is one being hurt by the AI thesis. But they're the number one software play out there. I'd actually recommend putting them on the watch list, but white collar jobs slow down. Salesforce really will get hurt. But let's see if there's any news down here. Weekly news, nope. But yeah, check out how diversified the revenue streams are. This is what I love. They're in services, sales, platform, and other. They own Slack. Like 50% plus of the S&P 500 uses Slack. Integration, analytics, marketing, commerce. Number one CRM play out there. The revenue's up 9, but the net income is up by 30. So they're having some net margin expansion. Yeah, nearly 20% net margins now. There's still some room for them to grow that. Get a 0.6% dividend. They're now doing some share buybacks as well. So actually, I do like Salesforce, but I wouldn't go full-size position yet, because they could still struggle for a while longer. They're kind of like Adobe. They're another one like Adobe where they're scared just AI, what's going to do to them. But they're cheap. They're cheap valuations, and they're doing buybacks and stuff. So Rubrik, this is your new cybersecurity play. They kind of just IPO'd, and I love the growth. That's why I'd actually put this one on the watch list because they're super, super growthy. If we go over here to just the sales are up 51 after it grew 35, and there's no more year-over-year comps because it just IPO'd, but the growth has been insane, and that's halfly because they just bought a company. If you go to the cash from investing activities, if this is negative, that means they just bought an asset. You don't really want this to be positive because that means they're selling some of their actual assets. But they bought a company for $700 million, and that's why the growth rate's also going because they're buying new assets or just reinvesting in their own company. So that's what I like about Rubrik. I put them on the watch list. They may still be a little overvalued here. They still lose like $100 million in net income a quarter, but they're narrowing those losses. Yeah, they're in my hidden gem kind of watch list here. They're one I think is pretty cool. Yeah, Rubrik's interesting. So NNE, this is a kind of a startup. Well, let's see, a $2.3 billion company. Nano Nuclear rebrands its Canadian business to True North. Well, let's see, is there any news down here? Forms True North Nuclear Division post Canadian acquisition. Oh, so they did some sort of acquisition, I'm guessing. Well, let's see. Do they have sales right now? I guess that's good. That makes sense. So if we go to the right now revenue, they have no revenue. Hey, TWH, remind me to look at SoFi. We already looked at SoFi, but it's been a while, and we will get to them in a minute here. So anyway, yeah, if we go to NNE's revenue, it says no data because they've never sold anything, they've never sold a product or service, and they're losing net income. But there's a lot of momentum around these nuclear names, and it looks like they just acquired maybe a reactor, some sort of Canadian asset. So that's interesting. I'd be careful with that name, but interesting. Do you believe that Taiwan Semi is overvalued? I actually don't. I think there's actually a little bit more room. Taiwan Semiconductor could go up. Yeah, if I own shares, I wouldn't sell them. So here's DigitalOcean. This is another cybersecurity play. They have like a ton of subscribers, like a bunch of subscribers that pay like over $100,000 a year, which is pretty interesting. Check out the analyst expectations. The revenue is supposed to continue to climb up. Look at these EPS beats recently. Wow, slight miss on EBITDA, but let's check out the net income. So first off, they're making a lot of money, and these growth rates are insane. Looks like the net income used to be 20, 15 mil. Now they've upped it up to 30 mil. So maybe we can go to their margins. Yeah, net margins is 17% net margin in the most recent quarter. What are they doing with all this net income? Well, one thing I really love about DigitalOcean is all the buybacks that they do. Check that out. They spent 20 mil this quarter, 60 mil last quarter, 30 mil, 10 mil. So and 2023 was crazy. I remember they bought back like 10, 15% of the company in just a year, but they're a shareholder friendly company. Don't worry about the debt because a lot of these are like intangible assets that they could pay off this debt. They just choose not to because they don't need to. They just do share buybacks instead. Anywho, I like this one. I think they're an interesting like hidden gem player that no one really talks about. I like them. What app is that? Yeah, hey, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, that very first link there. Is PNG too expensive to buy? Oh, yeah, that's that robotics Canadian name. So it won't even let me buy it on this brokerage I'm on right here. It only gives me the paper trade option. And it lets me buy most Canadian stocks, so that's kind of weird. But yeah, they've just seen a lot of momentum recently. The growth, they did 19 million of revenue, up 17%. After it grew 60. So they're on some nice growth streak and they're making money. They're just like barely losing any money now. Good balance sheet. So I don't know what their exact assets are. And I kind of want to do some more. Maybe we can click on their website URL right here and get oh my goodness, reject all. Can I just see transforming subsea intelligence? Well, hey, it looks like there's some sort of Kraken synthetic sonar, LiDAR systems, products. This is what they sell, I guess. Sea power batteries, LiDAR solutions. Well, there you go. Looks like a lot of momentum around that one. Probably overvalued here. But the whole momentum's in that. I have 10K right now. What would you do? Well, that's what's so tough right now. Literally the S&P 500 and literally everything's at an all-time high right now. If we just literally click the SPY, which is S&P 500, literally as we speak, this second, and never in history, never for a single second in history before today, has the S&P 500 been lower. It's literally at an all-time high this second. So it's tough. It's tough buying anything today at their current valuations, but there is some stocks that I think are kind of at some decent valuations. Again, first off, you eventually want to move it. Like you want to put the bulk of your portfolio just into S&P 500. Most people can't beat the S&P 500, and not even just most people, but most hedge funds, institutions, they can't beat the S&P 500's 8 to 10% CAGR. So you can't beat it. Own some of it. Like, look at us. You remember, we're down on the day. We're down 0.46 and the S&P's up. We're not beating the S&P. So anyway, but yeah, you could buy some individual companies, some stocks that I think are at all right valuations, Progressive, the insurance company, Sprouts Farmers Market, Maine. But these are all kind of like the value dividend plays. Like it's not the stuff that people want, like the AI stuff, Palantir, Axon. It's not the super AI stuff, but all right. When do you enter the S&P 500? Honestly, it's worth buying the S&P 500 if you plan to never sell it, like me, like just plan to never sell the S&P. It's worth buying even now. Yo, absolutely, W. Brian. Yo, shout out to my friend Brian. He just became a member on my YouTube channel. Dude, thank you so much, Brian. Yo, if you got a stock you want me to look at, let me know, man. I got you. Thanks so much. Hey, that also gets you access to my Discord. Okay. Bro, do you need a thumbnail designer? I'm actually good, man. I do appreciate that, though. Food stamps cut today. Or yeah, I actually heard that Hellfire. Basically, or in a week or so, whenever people go to the store to swipe their food stamp card or whatever, it's just not going to work. So that's the stuff. People forget, like the government's been shut down now for like nearly a month. Like it's crazy. The government's still shut down for a while. But hey, S&P 500 don't care. S&P 500 is at an all-time high. Oh yeah, we got to get back to SoFi, and then we can get to MicroStrategy and some of these other names. I do own SoFi, by the way. 20% of the S&P 500 reports this week. Oh, dude, probably a lot of that is just Google, Amazon, and Meta. So yeah, that's crazy. Progressive will have a special dividend anytime soon. Yeah, Looney, right around Christmas time. Every single year, December is when they do the special dividend, Looney. NEE. Oh, so sorry, Phil. We'll get to NextEra Energy after this. Heck yeah. I actually love NextEra Energy. So here's SoFi Technologies. Yeah, hey, we'll try not to spam there. We'll get to Rich Tech Robotics. Okay, well, maybe. Okay, so here's SoFi right here. I do own this company. I expected them to beat like crazy on earnings, but I didn't expect them to be green just because of how much like the stock has already rallied up and basically priced in this huge beat, but it just continues to win. Here's the actual numbers. Here's the orange line, the analyst expectations from S&P Global. Every quarter they beat on expectations. They beat on revenue every quarter. They beat on EPS, which is net income, every quarter, and they beat on EBITDA. So no wonder whenever they report earnings, they gap up so much. I just think people are starting to really take SoFi serious. They're making net income every quarter. This isn't the most recent quarter. What was the EPS? Oh, they actually made a lot more than that. Wow. So they made well over 100 million of net income this quarter. This is last quarter, but this next quarter, the EPS was even higher. So SoFi's a beast. Oh yeah, and I forgot to show you this. The main growth driver behind this, leading to all the beats, is actually the growth in their fintech services. Check this out. I mean, no analyst expected this sort of growth. It's up 105, after grew 80, after grew 223, after grew 444. Like the growth is just nuts. So yeah. Okay, let's look at NextEra Energy. Then we'll get to Symbiotic is the way better play than Rich Tech Robotics. I agree. Rich Tech Robotics. We'll talk about robotics after this next, and then we'll try and get to Google and RCat. Red Cat's a cool one, dude. Thanks again, Brian Paul, for the becoming a member. Thank you so much, man. So here's NextEra Energy. This is a nice utility play. If we look at the dividend, you get a 2.6% dividend. And check this out. They raise the dividend every year. They're in the S&P 500. They're the largest utility by market cap, actually, bigger than Constellation Energy. But yeah, they own Florida Power and Light. So if you live in Florida, most likely your utility bill is through them. They print money from that. They had a little one-time adjustment to their net income last quarter. It says they only did 464 mil. Well, they actually made around 2 billion. So this was just a little one, or actually probably like 1.6 billion. So don't worry about that. So their dividend's super safe. So the PE ratio, it says it's a 26. It's actually much lower than that. It's actually like a 23. So yeah, we can just see this. If we just go to the whole utility ETF, ticker symbol VPU, this literally the largest holding of it is NextEra Energy. And then it's Constellation Energy because it's market cap weighted. Also, they just revived like a nuclear reactor, I'm pretty sure. Check this out. Whoa. NextEra Energy and Google partner in a 25-year nuclear power deal for an Iowa plant. Will create 400 full-time jobs, generate $9 billion, and NextEra Energy will acquire 100% ownership. Google will purchase power for cloud and AI infrastructure. That's incredible. So they're opening up a nuclear reactor and they already have a company, which is Google. So this is a regulated utility, which is why it's weird that the stock is down on that news. Again, here's my prediction. Watch it come true, I hope. But I'm guessing Constellation Energy, this is the largest nuclear reactor play out there. They own 30% of all the U.S. reactors. I think they're wait. Sorry, I lost in the chat there. This one, they're gonna do a deal, I think, with Oracle. They were sniffing out some sort of another huge customer agreement with some sort of huge like Fortune 100 company as a new huge customer, they were saying. So anyway, let me get off that one. But I love that. I would look into NEE. I would maybe buy Next Air Energy. What's the best app to get stocks and get info on? Yeah, hey, I think this one right here, Cam. Yeah, this brokerage right here. These are all right here brokerages where you buy stocks on. Robinhood, Webull. But my opinion, out of all three of these, this one is the most useful. It's free, no commissions, no fees at all. Like with Robinhood, you have to pay $5 a month for some of the features, but this one's completely free, costs nothing. If you want to get it, it's in the link tree in my bio, very first link there. Yeah, hey, I sold SoFi too early. I saw that. Yeah, that's one of my biggest regrets out there with some of these stocks. Is actually selling out of great companies too early. Like Robinhood, for example, I own 5 shares. I sold a lot more. I sold 50 shares at $36. It's way higher now. Same with SoFi. I sold shares lower. But yeah, we've all been there. So I've only been burned by biomedical companies with zero revenue. The gambles don't pay off. Yeah, I agree. The risk reward just isn't great on those. Okay, so let's look at Rich Tech Robotics right here, and then we'll get to Symbiotics. So Rich Tech Robotics, this is basically pure robotics momentum play. Let's see what this is. Some of these are, just fake partnerships that are just marketing. Let's see. The robots will provide beverage service and participate in VIP events. Yeah, that's we saw Tesla do that. Okay. But here's Rich Tech Robotics right here. This one, if we go to here's why I think this one's hard to trust with real money. Again, if you've owned this one, you've probably done great because there's a lot of momentum. But here's why, out of all the robotics plays, I'd pick Symbiotic or even Amazon over this. So check this out. If we go to their sales, the revenue, the revenue is $1 million a quarter, and it was down 18. It's down 18% from the previous year. So the sales are much lower than what. Look at 5 million. Like the sales are already down bad. So in my opinion, instead of buying Rich Tech Robotics, I would buy one that has real fundamentals, real IP. Like this one has over 1,500 registered IP and patents through a warehouse robotics company helping out logistics hubs and warehouses like Walmart. And that's actually the number one customer. And Walmart loves them so much that Walmart even decided to buy a huge stake in the company. Walmart's the second largest shareholder. They own 13.5%. SoftBank owns 35%. But check this out. This one has real sales. Revenue's up 25. After grew 50. After grew 77. So the growth rate is insane. And they're barely losing any money. So I would pick Symbiotic as a pure robotics play. Also, Amazon. No one talks about Amazon as a robotics play, but they're the best to benefit. And it's obviously not a pure. It's obviously not a pure robotics play because of all of Amazon's other businesses, but Amazon will be the most to benefit from all the job replacements too. Yeah, I just read the article and wanted to know what you thought. Oh yeah, hey, let's see here. What was that stock? Red Cat, RCAT. Hey, what up, Max? Good to see you, man. Why isn't Plug moving? Oh, I'll tell you why Plug isn't moving, sadly. All right. How much do you earn in dividends each month in total? So on average, I make less than like $80 a month in dividends. And that's because, and again, actually, if I did the math on this, if I moved all my money in McDonald's, all my portfolios in McDonald's, I make about like $180 to $200 a month in dividends. But I, again, choose to buy the lower yielding names that, again, I don't want to be in the super high yielding names yet. But yeah, like I own Meta. But actually, this is, if you look at the top, it's called my dividend only portfolio. Every stock in here pays a dividend. Google, Meta, Constellation Energy. But as you notice, these are dividend growth names that you're not buying them for the dividend. You're mainly buying them for the total return, the stock price appreciation. The dividends like the cherry on top. But in 5 to 10 years from now, they will have risen the dividend so much. Hey, have a great day, sir, and see you later. But in 10 years from now, their dividend will be risen so much that it will be meaningful income. Hey, what up, loving life? Thanks for the rose. I hope you are loving life. If you got a stock you want me to look at, let me know. Are all these apps in the link tree in my bio? Yes, they are. By the way, these are all brokerages. These are all where you buy stocks on. So, they ask you for a bunch of information. They send you a tax form because, if you, somebody was asking about like, why are they, if you make money on a stock, you got to pay tax on it. But anyway, out of all three of the brokerages, though, I would recommend Moomoo the most, or it's the very first link in the link tree in my bio, lowest fee brokerage, and it has the most useful tools. But yeah, also Robinhood's a great one for the Roth IRA feature. By the way, they're all in the link tree in my bio. They're all also affiliate links too. So full disclosure. So if you go and like deposit $100, we'll both get like some free stocks. It helps out the channel. So anyway, here's Red Cat. Sorry about all that. This is the drone play out there. This one is in a crazy phase right now. So if we go to the right now revenue, it's terrible. The right now revenue is nothing. It's 3 million, but check out what the analysts expect. This is why if you own the stock, the next 6 months are going to be insane. The revenue expected next quarter is 8 million, but then the quarter after that is 49 million of revenue. I'm talking like the revenue is going to go crazy. So remember, Red Cat completes Palantir navigation software test on U.S. Army Black Widow drone. Yeah, this U.S. Army Black Widow drone, also, we remember looking at this stock a couple months ago, got NATO approval. So anyone in NATO can buy this drone. But anyway, this is a drone play with the government. And basically, you're waiting 6 months till they finally report this 49 mil of revenue. That's kind of the future growth expectation. So there's a lot of trash drone plays, but I like that one a lot. They're still losing money, but I like that one. CEO of NVIDIA opening was great. Yeah, I saw that. Yeah, NVIDIA also, people are asking about Nokia. We just looked at Nokia, so I'll just be super quick about this. But Nokia actually is going up because NVIDIA invested $1 billion into the company. I kid you not. No, Nokia partners with Ericsson. No way. Or is that Ekison? Or I don't know what that was. But anyway, if we look at the top here, this kind of news article, NVIDIA plans to invest $1 billion. At a purchase price of $6.01, and it's $8 today. So where's $6.01 on the chart? So that's where NVIDIA bought in. Wow, that's pretty cool. So NVIDIA probably owns like 4 to 5% of the company. I think are they net income positive yet? So they're kinda, yeah, they are making, if you average it out, they are making money every quarter. So anyway, that's interesting. All right. Why isn't Plug moving? So here's the thing with Plug Power. Hey, then we'll try and get to Robinhood stock. That one's kind of cool. So here's Plug Power. This is one I'd stay away from. This is, it's just a money burner. Like, these are just not the kind of stocks I like to own. Just like, it's just hard to trust these names. And I'll just show you what I mean. I've been burned on a company very similar to this called ChargePoint, but it's not even about the industry. It's about their financials. So if we look at the market cap, this is a $3.3 billion company. I mean, huge, $3.3 billion. But if we go to their net income, just this quarter, they lost 228 million, 200 million, 1.35 billion, 200 million. I mean, literally every quarter, just for eternity, they lose hundreds of millions to $1 billion of net income every quarter. And, that's a significant chunk of their market cap. So they're actually having to dilute you and issue shares every quarter. They're diluting you and issuing shares every quarter, close to 100 million. They're not able to do it this quarter because the stock is at all-time lows and they're having troubles. But this is one you want to stay away from. They're a huge money loser. I don't even I think they do like hydrogen charging or electric vehicle charging or something like that. I think the net, whenever they get to net income positive, what's the end game net margin there? It's a commodity, probably a single digit net margin at the end of the day if it ever gets competitive. But hey, I didn't mean to bag on your stock here, but just the fact that they lose all this net income just worries me. And it's not really getting better either. They're a long way from what I want to see. So those are fun to swing trade. So I wouldn't call you crazy if you're doing some short term, because there's a lot of momentum around that industry right now. You do some sort of short term swing trade, day trade, but I wouldn't just never buy. I wouldn't buy and never sell them. How much capital do you recommend to start with? Dude, like $100. I mean, it doesn't need, when I started this portfolio right here, actually, I can show you the all-time here. It was like a couple $100 for the longest time. It's kind of hard to see here. It's on the very left, but this account was worth $160, $170 for months. And then as I deposited more money, all those blue circles is every day I deposited money. And as the market just goes up, my portfolio balance keeps on growing. So yeah, And you can buy fractional shares. You can buy if you're like, dang, I wouldn't, I would never recommend buying the stock at this price. But if you're like, I wanted to buy a share of Comfort Systems, but dang, it's $984. On any brokerage, you can pretty much buy fractional shares, like point 0.1 shares. So you can buy in any company you want. Any nuclear with EU connections? I know nuclear names, but not any specifically with EU connections. Best nuclear name out there, and I've looked at all of them. SMR, Nano Nuclear, Oklo, Vistra Energy, GEV. My favorite one is Constellation Energy, best nuclear play out there. Literally largest pure play. They own 30% plus of all the nuclear reactors, but it's overvalued here. I couldn't buy it here, but I think they'll continue to win. I do own them too, so I'm totally biased. Can you trash my Qubit stock? Absolutely, Adrian. Dude, first off, you're probably a happy shareholder because this one has just been insane the past couple months. I'd recommend trimming this stock. I wouldn't just have this as a meaningful size position. Keep it as a small position and then let it grow into something meaningful size. And I wouldn't recommend this one simply because I'm a financial investor. I like looking at the numbers because in the long run, financials and numbers outshine. And if we look at this company's market cap, they're worth $11.5 billion. $11.5 billion is a lot. And I've seen a lot of $11.5 billion companies, and the numbers are just too tiny right now for it to really be worth that. But let's go look at their future partnerships because Quantum's is crazy. So D-Wave Quantum secures $10 million contract for quantum computer installation in Italy. Hey, that's cool. IBM leads quantum computing revenue race with $1 billion. Yeah, IBM and Honeywell are two. I almost want to pull up the Honeywell investor presentation to share the quantum progress, like coming from Honeywell. Or that's coming in the future. But anyway, yeah, Qubits. This is like the purest momentum name because whenever quantum stocks do good, this one always does the best. Way better than RGTI and all the other names. But yeah. All right. What's the name of this brokerage? Yeah, hey, thanks there. Yeah, the name of this brokerage is called Moomoo. Yeah, it's a brokerage where you get stocks on. It's also it's also in the if you're on TikTok, it's in the link tree in my bio. If you're on YouTube, it's in the link in the description of the stream. But yeah, you can just type it into Google, Moomoo. All these are, yeah, you can just type into Google Webull or Robinhood. I love all these brokerages. But yeah. If you want to use my affiliate link though, link tree in my bio. All right, so let's see here. Quinn said, thank you. Best live on TikTok. I appreciate that. Hey, yeah, if anyone wants to hit the follow button, we stream every single day. We just look at stocks and stuff. So here's the honest company. Yeah, I didn't want to trash it too bad, Adrian. I didn't want to be. So anyway, someone said compare Moomoo versus Webull. Yeah, hey, I've actually done that on my YouTube channel. Actually, if you go to the link tree in my bio, like the 6th link there, I have a video. Actually, I have a video where I compare Moomoo versus Robinhood versus Webull. I compare all the brokerages. And out of all the brokerages, this one is my favorite, Moomoo. Lowest fee brokerage and most useful tools. It's in the link tree in my bio, the very first link there. So here's the honest company, and I'm going to give you my honest thoughts on the honest company. I just don't love the slowing growth here. And again, they just sell a commodity. 60% of their sales are diapers and wipes. But if we go to revenue right here, the sales, the lifeblood of the company, the revenue is only up 0.44% year over year. Like, I just don't love that. I wish the growth rate was a little higher. That doesn't even beat inflation. So 0.44% revenue growth. But good news, if you go to their net income, they did make net income the past 2 quarters. They used to struggle, but now it looks like they're making consistent money. Like, there's no bankruptcy risk here. Like, they're making net income every quarter. They have a big net cash position, but I just don't really know if I expect this one to really outperform in the long run. They sell like healthy diapers and wipes. Let's see, or we can click on their website right here. I was looking at the breakdown earlier. Like, it was like almost close to 70% of their sales are diapers and wipes. So, yeah, look, see, they always promote the top selling stuff at the. Okay, anyway, they're interesting though. If you want exposure to the healthy wipes and stuff, there you go. Can you do Celestic? Yeah, what's the ticker symbol for that? Yeah, if you got a stock you're gonna look at, give me the ticker symbol and we'll check it out for you. Ooh, Novo Nordisk. CLS. Yeah, hey, remind me to get to that one. And then we'll get to Crispy. What up, dude? Sprouts Farmers Market. We'll check out that one too. So here is Novo Nordisk. This is your weight loss prescription play. This is the company that owns Wegovy and Ozempic. So, Elon Musk is on Ozempic. So, there are these weight loss prescriptions or injections really But the reason the stock has collapsed, or really the multiple has collapsed on this stock compared to the industry average, is because they're losing their exclusivity. They used to outperform, used to trade at a way higher multiple, but now they trade at a way lower multiple than the industry because they're losing their patents and exclusivity for Ozempic in about 2 to 3 years, and that's all their revenue. Legit, 93% of their sales are their diabetes and obesity care products. So that's what I love. That if you want a pure weight loss prescription play, this is your play right here. And if this is the thing, that's why I'd add them to the watch list. I'd look into them. I wouldn't make them a meaningful size position here just because but check this out. The net income, their after-tax net income is crazy. They're doing 4 billion plus a quarter. I saw this article that caught my attention up here. It says Berenberg demands Barron expects Novo Nordisk to clarify issues soon amid uncertainties. So I guess there must be some bad news here. Novo Nordisk Foundation triggers major board overhaul with former CEO as chairman. Percent clinical trial, GLP-1. Okay, anyway, yeah, that's your weight loss prescription play right there. So yeah, nice. There you go. So let's go ahead and pull up Celestica right here. And then we'll look at Sprouts Farmers Market. Are you concerned about Amazon's AWS failure going forward? Hey, if it never happens again, then it never even happened. Yeah, I'm not concerned at all from a financial point either. Wow. Let's look at Celestica. We'll actually look at Amazon a little later because Amazon reports earnings, and we'll get to Marathon too. If AI bubble crash, will the interest rates go up or down? The rates will go down, because that's what's propping up GDP is AI apparently. Anyway, this is Celestica stock right here, $37 billion market cap. Is there any news? Oh, they reported earnings. That makes sense. Well, let's see. Celestica said 16 billion revenue target for 2026 with strategic focus on AI infrastructure. So I guess this is your AI infrastructure play. 16 billion of revenue. Let's see what it is now. So 3, 6, 9, 12. Yeah, so it's 12 billion. That's a big growth. So they're really expecting a lot more growth, and not just revenue, but look at the revenue. The revenue's up 27. The net income's up 200. I mean, that's some great net margin expansion. Highest net margin ever. And yeah, that is this quarter. Yeah, there's the analyst expectations every quarter. They beat on revenue. Whoa, big beat on, that's a double on net income. Like, that's what was shocking. Like, analysts expected this beat. Like, this beat was already being priced in, but then they just go up anyway. Like, they're still up 7 points. That same with SoFi. Like, I'm surprised. Like, these are great numbers. This is the kind of stock that just continues to climb higher and higher. It's overvalued. Yeah, probably wouldn't buy it here, but I wouldn't sell it here if I own shares. That's a good revenue target kind of forecast there. Kind of cool. Yeah, I love when they give good guidance. So let's pull up Sprouts Farmers Market right here. So Sprouts Farmers Market, yeah, reports on October 29th. So if you're looking for a stock to buy before earnings and bet before earnings, maybe check out Sprouts Farmers Market. I think I'm really bullish going into earnings. This one's been struggling a bit recently, but this is a healthy grocery store, and their numbers look great. We look at the sales, the revenue's up 17, the net income's up by 40. They're expanding margins. The net margins is what you really want to look at. Honestly, everything about this company I like. They're kind of being out innovated, I guess, a little bit because they don't have an online presence, but they're not really focused on the same customer. So I'm bullish on their earnings. I can't wait to see what happens on earnings day. Let's go. Yeah, I think Americans want to be more healthier. What got you into stocks? What got me into stocks was basically losing my job. I had no money coming in, and I'm like, I need to do something with this money and can't just let it loose to inflation. So that's what basically got me into stocks a long time ago. Marathon. We're actually at an all-time high right now. I can't believe that. We're almost up 14K. Powell Industries at an all-time high. I don't believe that. A lot of stuff is at all-time highs. The S&P 500 is at an all-time high today. Oh, yeah, Lopez. Let's pull up Google. Google's another one that reports earnings. Actually, I'll pull that up over here. We do own Google shares. They hit an all-time high yesterday. They hit an all-time high today, but they're not at it right now. But yeah, this is a great never sell stock. If you own shares of Google like me, don't sell here. Don't trim here at all. Yeah, hey, what's up? We'll get to DEFT. I see some people talking about that kind of startup microcap, but we'll try and get to that one. But yeah, here's Google right here. Even if you buy the stock now, they trade at a fair 28 PE. They trade at 28 times net income. That seems fair. I mean, this is an ETF in one. They literally own Android. They own YouTube. The Google Cloud is huge. They just bought Wiz for $30 billion. DoubleClick. I mean, They own Waymo. They're in TPUs, quantum. Like this is one I think is just going to be a winner for the long run. We look at their net income they print. I mean, easily 25 to 35 billion in net income a quarter. And what is Google doing with all that money? Well, they just started paying a dividend, and the dividend only costs 2.54 billion a quarter. So the dividend costs nothing. Since they have so much left over money, they're deploying it all on share buybacks. Literally spending 15 billion of their after-tax net income a quarter on share buybacks, and they're also investing in AI now. Their cash from investing was 25 billion this quarter, a record. So they're investing in the future again. Whenever you go to the cash from investing activities, you want this to be negative because that means they're buying new assets, investing in the future. Part of that was maybe Wiz, but anyway, Google's just continue. I think it's just going to continue to win. They used to be seen as an AI loser, but now like Google integrated AI into the search, and Gemini is just as big as ChatGPT now, and pretty cool. Oh, watch out for the guy in chat there. Actually, I can get that guy fully banned off TikTok. Well, whenever those people are like, first 5 people to message me. Well, luckily I know someone, and that guy will no longer be on TikTok. But anyway, yeah, watch out for people impersonating me in chat. Guys, just know I'll never follow you, DM you. I sell nothing. I have no course, book, WhatsApp, Telegram. I literally have none of that. Literally nothing. So watch out for people impersonating me. Only thing I do have is a YouTube channel. Best way to support me if you want to, just sub to my YouTube channel. Hey, what is Legions? Give me the ticker symbol for Legions. So people are saying DEFT. Let's check out DeFi Technologies. I think they're worth like a couple hundred mil. Yeah, so here we go. They're worth $785 million. There's no news. That's all right. So $700 million company. Let's see what industry they're in. They are in Solana Treasury stablecoin. Well, let's see. Revenue is the revenue looks choppy for some reason. Like the revenue was 13 million, but like the revenue went negative. That's weird how the revenue went negative. So this must be some like investment. Like what did it say this company does? It said it like owns part of publicly traded stocks or something. It plans to acquire equity, debt, or other securities of publicly traded or private companies. So I don't know. Maybe it owns a bunch of what's that called? Solana? I don't know. So it's some sort of crypto play. I wish I could give you more thoughts on them. So I apologize there. So EOG, please. Yeah, EOG is one of my favorite oil and gas plays. Like there's Chevron, Exxon, but I like EOG more than both of those because they're a bit more disciplined. Again, they're still struggling because of the price of oil. Is if you go to the revenue's down 11% year over year, but that's the same for Exxon and Chevron. So the revenue's down 11, but check out the net income. They legit make 1.5 billion in net income a quarter, and they also have a nice dividend. They do special dividends as well. That's another cool thing. So they have a low 3.5% yield, but back when oil prices were crazy, they were doing legit like monthly special dividends back in the day. I remember it. So yeah. They also do crazy share buybacks. If you go to the net income, notice the net income is down by 20%, but the net income per share is only down by 16%. That's because the share part of the ratio went down. So you get like 3% buybacks, 3% dividends, and hopefully a couple 1 to 2% stock price appreciation. Yo, by the way, couldn't connect to the internet. Great. Hopefully that doesn't crash the stream. Yo, sorry, my Wi-Fi is bugging right now. If the Wi-Fi or if the stream is lagging, don't worry. It's me, not you. Oh, hey, Brian, what up, dude? Shout out to the member. He said USAR. So yeah, this is USA Rare Earth. Then we'll get to LG. Okay, LGN. What is on the top of your list? Ooh, I'll show you my list after this. So here's USA Rare Earth. Yikes. Look at the momentum has crashed on the USA Rare Earth stock. I don't know if this is the one that got a deal with the US government. It's probably because the tensions are dying down, China was just making it super difficult for the for US companies to get access to the rare earth minerals by making them go through certain permitting process so they can track where it goes and who gets it and stuff. But now maybe the administration is looking to walk that back, and now there will no longer be. Well, anyway, the government has been taking a stake into a bunch of these US rare earth mineral companies like Lithium Americas, MP Materials, because we need to be more rare earth mineral independent. And this could be another one of the plays that the government eventually takes a stake into. So yeah, I think they're still pre-revenue right now. Like if you go to their right now revenue, yeah, their right now revenue says no data because they still haven't sold anything. But I wonder what assets they own. It's kind of just a momentum play. What about AbbVie? Yeah, hey, I love AbbVie. Yeah, hey, it's definitely lagging. I might have to end the stream here. Uh-oh. Hopefully it's good. Yeah, people are spamming lag. Uh-oh. Yeah. Um, all right, if this just doesn't. Hey, by the way, we'll be live maybe later tonight. We might do a live stream later tonight. By the way, we stream literally every day. So if you're able to hear me right now and want to hit the follow button, we'll probably be live later tonight and tomorrow. We just stream every single day. And if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert and you can see the stream. Wow, Legions is up 8% on the day to a new all-time high. I mean, it's at an all-time high, but they've only been public for a month. But that is a new all-time high on Legions. This is like a smaller HVAC play. So if we go to what are the revenue, it's installation and maintenance of HVAC systems. And engineering and consulting is another chunk of their business right there. Let's just go to their total revenue right here. Again, they just IPO'd, so we don't get too much data here, but the revenue is up 15% year over year. And did they make money on that? They did not make money the past 2 quarters. But anyway, I just like this industry right here. MEP work, mechanical, electrical, plumbing, HVAC work. I think like anyone with those kind of jobs that's the future, like with AI and everything. So yeah, they do HVAC and MEP. They're on my watch list too. My play, I actually chose to buy Comfort Systems right here. Too bad they've just done crazy good and they're at an all-time high. But yeah. Yo, dang, is this still lagging? Because it says it's still lagging on my screen. And I might have to end the stream here if that gets annoying. Does it matter which Google I buy? Not really. I own GOOG. So player one said JD stock. Let's see if I can pull this one up. Oh, Whirlpool stock? Yo, Whirlpool. I wonder how that'll do in a lower interest rate environment. So JD.com, I think this is one of the Chinese retailers. I don't love the Chinese retailers. If I was going to buy China stock, I'd rather buy some Chinese tech company. But this is an ADR. You pay the yearly ADR fee, but that's no biggie. What's the dividend? So look at that. You get a 3% dividend. That's actually really good. They just started this dividend 2 years ago. So you get a dividend, a low PE, obviously, because they're Chinese. They trade at 9 times net income. Yeah, JD Retail. It's up 22% year over year, so they do have some nice growth. Here's their net income, and we've converted the currency from Chinese yuan to USD, so this is in a USD. The net income did fall 50% year over year. I mean, still, they're making 1 to 2 billion in net income a quarter. 1% net margin. It's basically like a Chinese Walmart. Or I'd rather buy Amazon or something. Just because they're Chinese and it's just they're not as growthy, but you do get the safe dividend. Stream better now? Okay, that's good. Yeah, my phone battery is... Dang, we're on 6%? I'm actually going to go have to grab it. Hey, the last couple percent of your phone always hit different. It always lasts longer, though. All right. It's like, when your phone's on 1% and then it lasts surprisingly longer than you thought. All right, Crispy said AS. Let's see. Okay. No. ASCCY. What is this one? So this is ASICS. Hey, this is I think that shoe company or I don't know. Let's go find out. This is a Japanese company. Yeah, we'll look at Credo Technologies and AbbVie. We got to look at AbbVie right here. Hey, Professor Oak, the legend is here. How's Gary Oak? So anyway, we'll convert this currency from Japanese won or Japanese yen to USD. I think they just sell shoes. Let me verify that because I've heard of ASICS before. Yeah, manufacture and sale of sporting goods, including shoes. So yeah, they just sell a commodity. But looks like they're making good net income, and this is in US dollars. 200 mil this quarter. You're making like 100 mil a quarter if you average it out here. And maybe the only reason they lost money it's because they IPO'd or something. Oh yeah, my stream is super laggy. Man, dude, someone must be like downloading a game or something in my house. I don't know what's happening. That's not good. Yeah. Yikes, the kilobytes just went to 600 a second. That's okay, it says it's green now. Okay, maybe it just comes and goes in waves. But yeah, ASICS, I'll actually put them on my watch list. I know Adidas is also publicly traded, but yeah, you get a 0.6% dividend yield. Thanks for telling me about them. They're interesting. Again, they just sell a commodity like shoes and stuff, but yeah. How do you think Visa will do today after earnings? Oh, we already looked at Visa. but I am so excited to see if their earnings. Is there a chance it lags when the phone charge is on low? No, it's just my Wi-Fi because I know my phone's always on low. So here's Wilden Group. This is one of those mid caps that I've looked at before. Look, they're only even after this huge rally, and then we got to look at Credo. They're only worth $1.3 billion. So let's see, they're a $1.3 billion company. Wow, record net income quarter. Was that real? Well, kind of. It was a record, but it wasn't as high as 15 mil. It was around 11 million. Still good. But let's see. Revenue is up 23%. They're net income positive, so they're making net income every quarter. Deleveraged their balance sheet by 5%. That's great. And they just bought an asset for 35 mil last quarter. They're beating on expectations. Check that out. Analysts expected 161. They reported 173. The EPS was a double. Wow. Analysts expected 49 cents. They reported over $1. So that really was a good quarter. That's probably why they gapped up so much. Okay, so let's look at Credo Technology, and then we'll get to AbbVie, and we got to get to First Solar. First Solar is the best solar stock out there. I've looked at all of them. I think it's better than Enphase, and yeah, dude, Looney. I mean, DDoS or something right now. Maybe it's Yield Max. Maybe it's Yield Max sending the sending the packets over. Okay, so here's Credo Technologies, $27 billion company. This is a stock that I believe deserves to be at all-time high. Let's see if there's any news. Credo, oh yeah, they were basically hiking their chip prices by 30%, and they went up a bunch on that day. Anywho, this is a company that isn't just propped up on momentum. They're propped up on good numbers. If we look at their sales, this is what justifies the crazy stock price appreciation and crazy multiple. If we go to the revenue, it's up 273%. After it grew 70%. Like the growth these past 2 years have been insane. And not just top line, but also bottom line. The past 3 quarters, 63 mil in net income. 37, 30. Also, a fortress of a balance sheet. They legit have no debt at all. $500 million of cash. Does that make them interest? It is. They made $4 million of interest on that cash as well. So Credo is a great company in terms of financials. It's probably overvalued here, but I love that. I love those numbers. I need to trade with him. Hey, what up, Rosa? Yeah, hey, if you wanted to get this brokerage I'm on or this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, it's a brokerage where you buy stocks on. I love it. Okay, so AbbVie, let's look at this one right here. I'm so sorry. I'm getting behind on the stocks here, and I apologize. Yeah, we'll look at PayPal because I know they reported earnings, and I think they announced a dividend too. So here's one of my favorite stocks of like all time. If you're just looking for a safe stock, if you're like, what's a stock that even if tech does bad, what will still return me 6 to 7% a year? My answer is AbbVie. Like AbbVie and McDonald's are just, I'm looking to buy a bunch of AbbVie in my main portfolio eventually. But check this out. They're a prescription play like a mini Eli Lilly. They own Sky Rizzy. Check out the growth of Sky Rizzy specifically. I mean, it's up 62%. After grew 45, after grew 50, after grew 63, it literally just hits a new record every year, every quarter. Now, that's what you call growth. Like this isn't just some boring dividend stock, it has a great, that's what I love. It's a boring dividend stock with a 2.8% yield that they raise every year, but they're not boring because they're super growthy. Like their main prescription, Sky Rizzy, is doing crazy. And not just that one, they also own a bunch of other ones like Rinvoq, whatever that is. It's up 41 after grew 55, after 55, after 53, after like the growth is just nuts. In their Botox acquisition that they did, I mean, like I really like AbbVie. I'm totally biased though, but yeah, they basically if we go to their net income right here, it says they went net income negative that quarter. They didn't actually. It was a little one-time adjustment. They're at a record. The point being, this is a safe stock that won't outperform the tech-heavy S&P 500, but I legit think even if you buy it right now, this will return you 6 to 7% a year, just always. It's like that, so safe. Kind of like a McDonald's. All right. Rolls Royce. Hey, RYCEY. Yeah, Rich Tech Robotics. The momentum's hitting them because people are starting to realize Rich Tech Robotics doesn't really have any fundamentals. Hey, what up, Luffy? Remind me to look at Vive. What's that called from Aviva card? Okay, so Here's Rolls Royce right here. This is really, a lot of people know Rolls Royce for their cars, their luxury cars, but it's really an aerospace and defense company. They make like jet engines. And check this out: their civil aerospace business is legit half the whole company. So half of the company is their aerospace business, and they're in defense. That's 24%. Power systems 22. So that's what I love about them. Also, this is a UK company, I believe, or yeah, so we've converted the currency from British pound to USD, and so that's why they report in halves. That's why it says H1 in full year, because they report in halves. But so far, this half of the year, it's a record, 6 billion of USD after tax money. It's incredible. So they deserve to be at all time highs because their aerospace and defense products are great. They're really profitable. So here, I'll be really quick, and then we'll look at PayPal after this. We got to get to PayPal, some of these other names. Here's the thing about Rich Tech Robotics. Here's why it's hard to trust this name with real money, in my opinion. If we go to their revenue right here, like I've looked at a lot of robotics names out there. This is one of the more junky ones, just because they have no IP, no patents, no revenue, really. If you look at the revenue, I mean, it's $1 million a quarter, and it's down 18% year over year. Like the revenue used to be like, I mean, 5 mil, but it's just not a great company, I think. Like for me to pay $1 billion over a bill valuation, it's just a momentum play. I wouldn't call anyone crazy for owning this one as some sort of short-term swing trade for the momentum that it's having right now, but I wouldn't permanently own that one for the long run. What happens is, yeah, hey, what up, Dingo? Yeah, hey, this is a brokerage right here where you get stocks on or buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Yeah. So they ask you for a bunch of everybody. So here's PayPal. They're up 7% of the day. I believe they just announced a dividend for the first time ever. So I remember a long time ago, or not even that long ago, I was like, PayPal, I feel like it's going to pay a dividend one day, or PayPal should be paying a dividend. And people in the chat were like, no, they shouldn't. You're an idiot. But here it was a good quarter, to be honest with you. If we go to their orange line, this is what the analysts are expecting. Every metric they beat on. They beat on revenue, they beat on EPS, and they beat on EBITDA by a pretty big, like 10% margin. So that was good. The one complaint about this company, if you're wondering why is PayPal, even after this rally, PayPal is the same price that it was in 2017. So PayPal's done terrible. Why? That's because the growth has slowed down a lot. If you go to the revenue, the sales, it's up 5%, 1, 4, 5. So single digit growth, not great, but it looks like the growth is starting to come back. And another thing that's really benefited from, or PayPal has benefited from, since they have so much leftover money, they don't pay a dividend. Well, if they don't pay a dividend, now they do. They've just been legit spending $1.5 billion a quarter on buying back their own shares. This has been a huge share buyback play. Here's how you can tell. The net income's up by 12. Net income's up by 12, but net income per share is up by 19 because the share part of the ratio went down by 8%. Kind of crazy. They bought back 8% of the shares in a year. So, okay. Any good long-term buys like SoFi? Unfortunately, sold on my SoFi too early. I've been there. I've had a lot of mistakes like that. Like I regret every share I've ever sold a Robinhood. Like we sold 50 shares of Robinhood at $36. We sold SoFi like half at their current price. But it's a tough pay right now. But in the same industry, if you're looking for another stock in the same industry, I love food too. They have a special dividend as well. That's Moomoo publicly traded, this brokerage right here. They're phenomenal. Like every metric just impresses me every time I look at them. But some stuff on my watch list right now, if you're looking for some more boring kind of like SoFi was a 3x. Like you could 3x your money in 5 years on that stock. Are you going to 3x your money on waste management in 5 years? Like probably not. But actually, well, it's kind of been that way. It was $100. Now it's $200. You can 2x your money. But anyway, I still love waste management. You still should get like 7-8% of your money back a year. But yeah, I love all these names right here. This is my hidden gem watch list. Like I'm actually looking to buy into Vita Coco. This is your number one coconut water play. They have a 45% market share for coconut water. And I think coconut water is getting increasingly popular. I don't know why, but I've recently bought a lot of their Vita Coco brand water, coconut water. They're completely debt-free. Stock has no debt whatsoever. They just now getting into Costco and stuff, and they have no debt at all, and they're making a bunch of net income every quarter. I just feel like as the market share of coconut water, it's super competitive industry beverages, but they have a 45% market share specifically on coconut water. I think that as that market gets bigger, and I think it will, they should benefit. Kind of cool of a company. That again, I don't own them, but here's some other cool companies like Rollins. Number one bug spray and a termite control play out there, pest control. I mean, boring stocks like this just do great, like Waste Management, John Deere. Okay, let's keep going here. Let me just take a sip of my water. But yeah, what up, 3 Day? Um, what up, Carmel and Charlie and Good Time? How hope y'all are having a great Tuesday. Someone said Rich Tech is terrible. UMAC, UMAC, Unusual Machines. I think this is some like robotics or space play. I forget. Or solid state drone solutions. It says batteries for drones. Well, it looks like they finally have some sales. These 2 million of revenue. This is a good growth rate, but it's easy to compare to small numbers. Million of sales. They just fortified their balance sheet. I'm guessing from issuing shares. Yeah, so they just diluted you by 40 mil, but it was worth it to beef up their balance sheet like this because, oh yeah, they kind of needed to do that because they lose a lot of money every quarter. But I'd be so careful with this name just because the fact they barely have any money. Or they barely have any sales now, but I guess the only direction it could go is up from here. Oh, check out the analyst expectations. They beat slightly. They're expecting 4 million in 2 quarters. You analyze that. That's 16 mil of revenue a year. $470 million company. That might be somewhat reasonable. If they do super future looking, but if they do like 20 mil of revenue a year, 470 mil market cap, I mean, but they're losing a lot of money. I wouldn't touch that one, to be honest with you, with anything meaningful. RMBS, Rambus. I've actually never heard of this one. Oh, yeah, we'll look at NVIDIA after this too. Do you just keep buying or when would you ever sell? Actually, depends on the stock. Some stocks I just plan to never sell because they're that quality. But if I lose my faith in a company like I did with DocuSign, then I'll sell it. So here's Rambus right here, $11.4 billion company at an all-time high today. Semiconductor space is where they say the revenue comes from. And yeah, they've been growing nicely. Sales are up 23 after grew 38. And they're making net income every quarter, easily 50 to 60 mil. Now the growth is slowing, like their margins actually just fell. Yeah, gross margins and net margins fell. But still, they're making 50 to 60 mil in net income a quarter, and they have a monster balance sheet, legit no debt at all. Let's see, actually, how much cash do they have on hand? $673 million of cash, no debt, and the whole company's worth $11 billion. So 5% of the market cap is their cash on hand. I just want to see kind of the growth come back. Yeah, so they missed on net income. It looks like that was a one-time adjustment too, maybe as well. So they might have. They actually probably, let's check the operating profit. Yeah, so the operating profit was up 26. So yeah, there probably was some sort of one-time adjustment there. It was a little higher than that. CECO. This is Kiko Environment. Hey, they're actually on my watch list. Oh, Ubiquity. I love Ubiquity. Oh, I keep forgetting to get to NVIDIA. So here's Seco Environment, $1.8 billion company. And they're at an all-time high. They're down 6% on the day. Let's see if they're worth maybe looking into. So engineered system segment, that revenue is up 30% year over year. And then industrial process solution segment up 32% year over year. Let's check out the revenue. So revenue combined is up 35. Profits, wow. So they're making that income every quarter. They had a one-time adjustment last quarter, but they are making like basically 10 mil plus a net income a quarter from now on, or hopefully. Let me actually go check out their website right here. If we click, they're in air pollution control. Let's see what they do. Products. Oh, dude, what is this website? Has installed more than 32,000 air pollution control systems. I want to see a picture of it. Okay, maybe. Well, anyway, there you go. Some pollution play. All right. We'll look at a few. Oh, VEV. Forgot to get to this one. Shout out to Monkey D. Luffy. Hey, Nikita, no way. Hey, thanks for all those roses there. Yo, if you got another stock you want me to look at, let me know. I got you. So here's Viva Systems. They're on my watch list as well. They reported some sort of good news or earnings, and they gapped up. Let's go see what their most recent earnings report was. So, they're a subscription play. I love subscription model plays because it's all reoccurring revenue. And check out the growth. It's up 17% after 19, after 9, after 18. So revenue just hits a new record every year, every quarter, and that's subscription revenue. That's great. So let's see net income. Wow. This is after-tax net income easily. At these growth rates, they're going to be doing 200 million plus of net income every quarter. So that's a 20 to 35% net margin That's insane. Yeah, and a fortress of a balance sheet. This is the kind of stock I'd own. 6.4 billion of cash and no debt. The whole company's worth 48 billion, so over 10% of their market cap is their cash on hand. So over 10% of their market cap is cash on hand, and then they make 200 mil. Yeah, I'm going to re-put them to the top of my watch list. This looks like a really cool stock. Yeah, thanks for that one. Hey, yeah, what up, Michael? Oh, let's get to Ubiquity. Let's pull out. We'll pull up Ubiquity. This is a phenomenal company, and I regret selling them a while back. But the growth and margin expansion is insane. If we look at the revenue's up 49. Like that's insane. So the revenue's up 49. And the net income's up 156. Check out, like the net income was already crazy. It was 100 mil a quarter. Now it's 266 million in net income this quarter. Gross margins are up 12%. Net margins are up 71%. Like everything in this company is headed in the right direction. Look at how they've deleveraged. Look at how the liabilities used to be higher than the assets. Now the liabilities are half their assets. This stock deserves to be at all-time highs. Look how sad this is. I sold the stock. I don't even know why I bought this. Like this was so long ago, but I had 2 shares of Ubiquity way down there. Good timing on that one. But anyway, yeah, they're a gray one. Oh, all right, we'll get to Target. Then we'll get. I don't. There's so many stocks I want to get to here. We'll get to Snowflake eventually and maybe Nvidia. So here's Target right here. This is mainly a dividend play because if you look at the dividend, check this out. You get a 4.6% dividend yield and a safe payout ratio, only a 50% payout ratio. So they do actually have room to raise their dividend. But the reason Target is struggling compared to like a Walmart or Costco is they sell more discretionary items at Target. Is only like not just groceries, food and beverages are only 22% of their sales. Then they're selling, household essentials, apparel, accessories, home furniture, decorations, beauty products. And, consumers are a little strained right now. And that's why Target is being hurt way more than your average grocery store. And they're just kind of being out innovated and they lost the growth in margins. So it's kind of everything here is headed in the wrong direction. If we look at the revenue, the sales, the lifeblood of the company, the revenue's down 1%. The net income is down by 21, which means the net margin fell by 20%. You're already a low margin business, 3 to 4% net margin. And they're kind of being out innovated. Like anything you can get on Target, you most likely can get on Amazon and on Walmart. And those two deliver it to you. I'm not sure if Target has an online presence where they deliver this stuff to you, but anyway, it's just a tough one that I don't really think will outperform the market in the long run, but the 4.5% yield is safe. Let's actually check the cost of the dividend. The dividend cost $509 million in a quarter. So the dividend cost $509 million and they made $935 million, so they could afford it. Nice. So all right, let's do Nvidia right here. So Nvidia, they're at a new whoa, almost $200 a share, dude. Nvidia had this new AI event today, building a $1 billion data center in Europe. They also took a $1 billion stake into Nokia, $5 billion stake into Intel. Some of this is old news, not today, but they took a $100 billion stake into OpenAI. Here's what's kind of circular about this. This is kind of cool. NVIDIA owns $100 billion of OpenAI. OpenAI owns 10% of AMD. So whenever AMD stock goes up, technically NVIDIA stock benefits. But check this out. Obviously, we know huge market share, 24% PC GPU market share. They have an automotive software that like Lucid uses and buys from them. And this is what makes them worth nearly $5 trillion. If another company can do this, Narga, we actually cannot look at DKNG because of the industry. The last time I did, I got in trouble. So if you have another stock you want to look at, let me know. So sorry if I sound like I've been annoying you. I don't look at those kind of industry stocks. My bad there. I could look at their numbers maybe for you if you want me to do that, but I can't give you too much context. And they're kind of just being out innovative. I don't love that stock. Kind of Robinhood now does exactly what DKNG does with their predictions market. So but give me another stock and I'll check it out for you. But here, my thoughts wouldn't have been good on that one. Thank you again for all the roses there. I do really appreciate that. But check out NVIDIA right here. Sorry, back to them. They did 26 bill in net income. I mean, up 60% after grew 160, after grew 28. Like the net income growth is insane. So, and they just showcased some new event. I was watching part of the event today. He had like his shield. Did anyone see like the shield he was holding of like AI chips? Okay. Let me actually check on the market. That must be sending the QQQ up like crazy. Let me actually go check that. Well, dang, my portfolio is tanking more and more. McDonald's is falling. Yeah, McDonald's and these safety names do bad when the market does good. Yeah, check out the QQQ. Wow, and the S&P 500. Congrats if you own the S&P 500 or the Qs. You know you got to be doing great right now. Here's the tough part about Nvidia, though. I will say, if we look at the market cap, if you buy Nvidia right now, you see they're worth 4.84 trillion. For you to double your money, they have to be worth nearly 5 trillion. That's why I'd buy maybe some of the Nvidia beneficiaries like Comfort Systems, the one that cools down the servers, from Powell Industries with their switchgear solutions, or Amphenol, the one that supplies Nvidia with their copper cables, to Constellation Energy, which powers which owns nuclear reactors to power the data centers. Let's see how AMD's doing. AMD went negative on the day. No way. So AMD went negative, but Nvidia is super green. Yeah, that's weird. Anywho, let's go back over here. We'll look at a few more stocks, then I gotta go. Yeah, hey, no problem, Elijah. Is anyone trading now? Hey, what up, Rosa? Okay. Super microcomputer. Yeah, I don't love super microcomputer just because actually with all the new chip orders, actually there was some good news around this company here. But with all the new chip orders, like OpenAI buying a bunch of AMD and NVIDIA chips, and Oracle and all these other companies buying chips, they're using Supermicro Computer to install the chips for them. But this is the total commodity. Here's the bad news. If you look at the revenue's up by 7. The revenue's up by 7, but the net income is down by 35. So unfortunately, that means their net margin is collapsing. As you can see, the net margin fell by 40%. Dell is starting to do them, but they get direct shout-outs from NVIDIA and AMD for how well they install the Blackwell chips and stuff. Hey, what up, Jacob? And hey, no way. Shout out to Mo. He said, what'd you think about XRP? Well, unfortunately, we don't really look at crypto on here because I just can't really give you any thoughts on them. Oh, remember the flash crash day on XRP? But here was the thing. Or here's the good thing about XRP, they don't really report numbers. They don't report quarterly reports, so they can't miss on net income or net margin. So it's kind of like a cool catalyst-free asset in terms of that. But yeah, that's all I can really say about XRP. I actually don't own any crypto at all. I own no crypto. And I kind of regret that because of how good stocks or how good Bitcoin has been doing. So let's see. Adam said QXO. Wait, I don't think I can give you any thoughts on this stock either because they just IPO'd or they just got their new housing assets. So basically, like something like just happened. Like look at the revenue. Revenue before today was 13 mil. Now it's like an astronomical change from 13 mil to 1.9 billion. So I wish I'm waiting to. This used to be a blank check company. Then they like acquired it or something. It's a housing market. Residential roofing, interest rate sensitive play. So in a lower rate environment, I think that one will do great. The home builders, we can actually see the interest rate cut probability if we go over here to stocks. Literally in a couple days on October 29th, there's a 99% chance of a 25 basis point cut. December 10th, there's a 90% chance of another 50 basis point cut. So rates are going lower, and the interest rate sensitive ones should benefit. So yeah. All right. So QXO is a SPAC. Oh, okay. Thoughts on Calm, waiting for improvements. Hey, we already looked at Calm. I love that stock, yeah. I like it as a small nibble at this current price. Like I wouldn't, if you wanted to make Calmain as like 5% of your portfolio, I wouldn't do it at today's valuation, but I would make it 1%. So I actually do own 5 shares of them in this portfolio. We're down 2.44%. That's your chicken egg play. If you're bullish on chicken eggs, the commodity, then you could buy Calmain stock. And that's why it's always, you don't want to have those commodity type names as a huge, as a huge chunk of your portfolio. All right. Okay, here. So, Brad Jacobs is a beast of a CEO. Forex winner he built. Hey, that's awesome. So here's Rocket Mortgage. This is another super interest rate sensitive play. As rates go lower, all the mortgage, a lot of people are going to refinance their mortgage rate because to get a lower interest rate, So yeah, direct DTC, direct to consumer is most of the revenue. They also just acquired Mr. Cooper, which is a great asset to own. Look at that was my favorite Oh, it obviously it's now under the Rocket. I wonder if I can still find it on Webull. Mr. Cooper. Coop. Yeah, here it's delisted, dude. This was a beast of a mortgage company, and they were acquired by Rocket Mortgage not that long ago. But yeah, basically super interest rate sensitive play, probably the best one. They also they bought Redfin too, dude. That was genius. They bought Redfin. It's kind of like a Zillow competitor, way better than Zillow. So we'll look at one or two more here. Hood stock. Yeah, hey, I love Robinhood. I am also a Robinhood user. So hey, I'm a Robinhood user, so I use their app, and I also own Robinhood stock. So let me show you their stock fundamentals. You know, they kind of they deserve to be doing this well. You know, they're not just propped up on momentum. Robinhood Robo Advisor hits 1 billion in AUM. That's actually crazy, and they take like a 1% expense fee for the first like certain amount of money. But anyway, here's the best part about Robinhood is how growthy they are. You know, the revenue's up 45 after it grew 40 after it grew 52. So they're just on a streak of growth. And look at this revenue. The revenue was 989 million. That was the revenue. The net income out of that was 390 million. They have insane margins, 39% net margins. So I just love the brokerages. I own Robinhood, Futu, SoFi. I own all those. So what app do you trade on? Yeah, hey, what up, Sparkle? I'm not sure what app you were talking about there. Yeah, by the way, I have so many different brokerages here. Here's my Robinhood position as well. That's a stock I regret every share I've ever sold on Robinhood. But yeah, by the way, all three of these brokerages are all in the link tree in my bio. Yeah, these are all apps where you buy stocks on. You know, they ask you for a bunch of information. But of all three of these brokerages, I do recommend Moomoo the most. Lowest fee, it costs nothing, and it has all those cool analysis tools. Yeah, if you want to get it, it's in the link tree in my bio, the very first link there. And it is an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. They're all affiliate. Good Time says Mr. Cooper had my mortgage. Hey, nice. All right. So all right. Hey, PayPal. All right. We'll close it up with PayPal earnings. Yeah, PayPal had really good earnings. SoFi after earnings. Yeah, I wouldn't buy SoFi after earnings, but they were phenomenal. Like SoFi had great numbers. Like SoFi still trades at 100 times next year's net income, but still a huge beat on what the analysts expected. It was a triple beat. It was also a triple beat on PayPal. Here's the orange line. You know, that's what the analysts expect. They beat on revenue. They beat on net income by a good chunk and on EBITDA. So it was a good triple beat quarter. They also announced a dividend for the first time ever. I think they announced a partnership with like OpenAI or PayPal teams with Google Cloud for AI services. PayPal Venmo partners with Built for housing payment service. So, hey, maybe you could pay your housing mortgage through Venmo. Or MasterCard and PayPal launch AI agent payment integration. So anyway, PayPal's interesting. You know, they're still the same prices they were back in 2017. But yeah. Someone said Bola said how far, bro? Hey, what do you mean how far? Or I'm not sure what I mean there. All right, I guess, and we can look at NVO. What's a stock to buy now for the most profit? Hey, that's the question we all want to know. What's the stock out there that's going to have the most profit? So, you know, the companies that I think are going to have the most amount of profit are the ones that just have great growing fundamentals, like great, just high quality companies. And I have different portfolios here, but yeah, those are all my dividend paying stocks. You know, my phone is, the Wi-Fi is tweaking again. Good thing I was about to end it after this. Yeah, okay. Hey, the Wi-Fi is tweaking, so if it's lagging, just know it's not you and it's me. So, hey, by the way, if you want to hit the follow button, we stream every single day, twice a day. Best way to support me, the number one way to support me if you want to, because I sell nothing. I have no course, book, WhatsApp, Telegram, and I have no, I'll never follow you, DM you. I sell nothing. The only thing I do have is a YouTube channel. So best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio, but yeah, you just type into YouTube, Nathan Robert. I'm also streaming on there, so if you miss anything, you can replay it. Yeah, that'd mean more than donating and giving me a rose. Just sub to my YouTube channel. I'm trying to build up my followers on there because I don't get many viewers and I don't get many views on YouTube. But anyway, here's Novo Nordisk. This is the last stock we'll cover. This is your weight loss prescription play. They own Wegovy and they own Ozempic. You know, like Elon Musk is on Ozempic. You get a great yield too, a 3.5% dividend yield. But one of the reasons the stock or really the price has collapsed and the multiple has collapsed is because of the future uncertainty around their future sales, because they actually lose their exclusivity for Ozempic in a couple years. And, that's how they get their margin. They're the only person that really sells the weight loss prescription out there. And if now anyone can just sell Ozempic in a couple years, that's going to tank maybe their margins. If we go to their net income, because for right now their numbers are great. That's why I'd potentially put this one on the watch list. Maybe nibble on them. I wouldn't ever have it really as a big size position, but maybe nibble on it because right now their numbers are great. They print money easily, $4 billion plus of after tax net income a quarter, 3.5% yield, 13 PE. But again, the PE is so much lower than the industry average because of that future uncertainty. Kind of just see that in the Morningstar research here. But yeah, they've also just seen a little bit of increased competition from Zepbound, from Eli Lilly. But yeah, MVL will hopefully get their pill out before Ozempic patents. Hey, yeah, actually, yeah, that's the next phase of it. Weight loss pills. That would be huge in the U.S. Hey, Phil Forrest, dude, thanks for the gifts there. I didn't even see that. So yeah, anyway, I gotta go. Hope you guys have a great rest of your day. Someone said RGTI, Riggedy Computing. Yeah, that's a moment here. Here's why I'd avoid these kind of stocks specifically. Like, they're fun to swing trade. They're fun to momentum, short-term day trade. But here's why you can't trust these kind of stocks. If you look in the top right, the market cap, they're a $12.3 billion company. I feel like I know what a $12.3 billion company should look like. And it's just hard to trust, like, to assign a $12 billion market cap on this stock. I mean, the revenue, the sales are down 42%. And the sales were $1 million. Like, this is all momentum. There's no fundamentals here. They burned through 20 million net income. They have no revenue. Are the analysts expecting revenue? Well, I guess, hey, look at that. Revenue is going to go to 2 million. But I mean, hey, it's momentum play. So yeah, as you know, I'm a fan. Like, numbers outshine in the long run. Numbers, like the financials of a company, explain why Comfort Systems is at an all-time high. It explains why Palantir and Google and Nvidia are at all-time highs, and it also explains why Lucid is at all-time lows and a lot of these junk names like ChargePoint. So anyway, that's why whenever we look at a stock, I always show the numbers, because that's what I find the most important. Because that's why every time a stock gaps up or gap down, it's always on earnings day from the numbers. And anywho, and we got a lot of earnings later this week. Actually, here, I'll show you this right here. Last thing, and then I'll do a portfolio update, and then we'll get out of here. So here we go. If I go to watch list right here, so tomorrow's huge. Just on Wednesday, we get Google and Meta. Like, already that's huge. We own both of those. Chipotle, Rollins, Carlisle, probably Coca-Cola Consolidated. That'll be fun. Sprouts Farmers Market. Murphy USA, that's my favorite oil stock I just bought. Vita Coco, hey, Opera GX browser. And then on Thursday, the day after, we get Amazon, S&P Global, Comcast, Mo, Train Technology, I love that name, ICE, the Intercontinental Exchange. They just took a big stake into Polymarket, the betting market called Polymarket, if anyone's heard of that. Republic Service, like a waste management, Reddit, Hershey. So we'll just have a fun time these next couple of days. Like 20% of the S&P 500 reports numbers this week. So we'll be looking into that. So anyway, let me end this with a portfolio update. This is our buy and never sell account, where once I buy a stock in here, I legit try and never sell it. That's the reason why we're up so much year to date. Year to date, if I show you, we're up 82% year to date. That's crazy, 82%, because we haven't sold our shares before today. Like Comfort Systems right here, we bought all of our shares of the stock this year, but we haven't sold or trimmed a single position. Comfort Systems, Powell Industries, we bought all our shares almost like 2 to 3 years. Bruh, I didn't click that. Okay. We bought all our shares, in 2023, and we haven't sold a single share ever. They're at an all-time high. Amphenol, all-time high today. Coca-Cola Consolidated is doing pretty good as well. So yeah, that's our never sell portfolio. And Murphy USA is our newest position in here, my new favorite oil and gas play out there. So that's our never sell account. Then we have over here our Robinhood account, which is called our dividend only portfolio, where, as you can probably assume, every stock in here pays a dividend. But as you can see, most of these are like dividend growth companies like Meta, Google, United Rentals, Constellation Energy. They all have like dividend yields of like under 0.5%, but you're buying them for the total return. Yeah, look at the Qs today. Congrats if you own any semi names. A new all-time high, like all-time high ever on the Qs and S&P 500. The Nvidia's up 5. That's what's leading the gain in the Qs. That's crazy. So then we finally have I know I got way too many portfolios. We have our Webull account, where I kind of just do whatever I want in here. It's kind of our risk on portfolio. We're up 26% all time. I love being fully transparent. I'll share with you every my lifetime return, how much I'm up and down on every stock. If you ever got a question for me, let me know. I also do stock portfolio updates all the time on my YouTube channel. I go to a lot of other streams. Not a lot of other people really share fully transparent all their portfolios, but I try to. Like year to date, we're up This thing at the top here annoys me. We're up 18% year to date. Oh yeah, we have a Roth IRA as well. I was going to forget that. Here's our Roth IRA. We basically started this exactly a year ago. It's so subject to change. There's a lot of trash in here. Yeah, we're down on some names and we're up on some names. Like Innodata's been a crazy good name. Nothing good to swing right now. Actually, CorMedix actually is one I just bought 6 shares of today. I feel like $60 buying some shares more. Yeah, that's pretty much the portfolio. Anyway, I'll be live tomorrow. I stream every single day. So anyway, someone said cash out. Nah, we're diamond handers over here. We never cash out. Cashing out is one of my biggest regrets ever. If you buy high quality companies like Robinhood, we're up to over 10x on my shares. I have 5 shares, but sadly, I used to own, 50 plus. I used to own like 60 shares. I sold most of it for a 3x. And like, here's the story. I bought Robinhood shortly after their IPO. So look, there's the buy orders. And I legit was down on this stock for 2+ years. I was just negative for so long, down 40, 50%. But then I was finally up 3x on my position. And I was like, hey, yeah, the thing was right there. I was up 3x on my position. I was like, hey, I've been down on this name for so long. Let me trim most of my position. And that's my biggest regret. Same with like SoFi as well. Every share I've ever sold in some of the other names. Also,